Hello everyone and welcome to the Digital Euro Summit 2022, live from the Bitkom studio here in Berlin. My name is Benedikt Vaupel and I'm Head of Blockchain at Bitkom, and it is my utmost pleasure to co-host and moderate today's Digital Euro Summit together with my friends and colleagues, Lucas and Kevin. Are you two as excited as I am?
Thanks, Benedikt. Well, of course, I'm excited to kick off together with you guys the second Digital Euro Summit after a great kickoff last year. But more importantly, we hope that you at home in front of your screens are as excited as we are. Before we get started in a second, there's just one thing I would like to remind you. This is a virtual event, but please make sure to be part of this, meaning A, use the live chat function in our live stream to make this more engaging for us and for you at home in front of your screens. And second, make sure and let everyone know that you are part of the Digital Euro Summit using the hashtag DES22 on social media, be it Twitter, be it LinkedIn, and celebrate the Digital Euro Summit together with us. That said, Lucas, what can we expect from today's afternoon?
Thank you, Kevin. Thank you, Benedikt. Well, what can we expect? A deep dive into the future of money, discussing everything from CBDCs over stablecoins to Mika and DeFi. I know, I'm excited. My name is Lucas Marszalek and I'm a project manager at Bitkom. We are delighted that an absolute expert will open the Digital Euro Summit 2022. A member of Bitkom's Presidium and CEO of G&D, Dr. Ralf Wintergerst. Dr. Wintergerst, I now yield the floor to you.
Thank you very much. And a very warm welcome to all of you to the second Digital Euro Summit. Participating also last year where we had over 1,000 registrations. I do hope that we have a good program for you as well, with 15 speakers, with panels, with fireside chats and with keynotes. And before I go a little bit to the agenda, let me talk a little bit about something where I just come from. I came earlier this morning from Singapore. I arrived at 6 o'clock at Munich Airport, and I'm still under the impression of the last 3 days where I was visiting the Asia Pacific Conference of German businesses. This is a conference which takes place on a regular basis. The last physical one took place in 2018. 2020 was a digital format. And this year there were about 800 participants in Singapore meeting and talking about the region. Certainly in these days you have to talk about geopolitics, but there was also a talk about digitalization. And I was in a small group with our Minister of Economics and Climate Affairs, Mr. Habeck. And we had the opportunity also to talk to the Deputy Prime Minister, the Finance Minister, the Minister of Trade of Singapore. And I was actually fully fascinated of how open Singapore is to technology and innovation, but on all levels actually, on governments, on business side, and also the people are quite acquainted to new technologies and innovations, and actually they are quite keen using new things. Most fascinating, I found the SingPass. The SingPass is something which is kind of a digital ID app, which can also be used for health applications, and at the same time is a KYC app for banks. And that combination was fascinating. And sometimes I feel that in Europe, we should speed up a little bit to have things like this, because it can really help to reduce administration, to foster new applications and new use cases in different areas. And if we look at the global technology race, there is an amount of $2,400 billion spent this year in technology and innovation. And Asia Pacific region is more than half of that. They spent more than $1,200 billion in technology and innovation. It's a race. And I think Europe has to decide whether we want to move fast or whether we want to move slow. Because the technical capabilities, we have it all. I think we can also do applications like SingPass. But exactly the financial area is also something which is very important to look at and how we deal with technology and innovation. Because financial services are really an indispensable good or service for the functioning of the society. And certainly it is way easier in an area like Singapore, a 6 million megacity or state city, to launch something like SingPass or to eventually launch a digital Singapore dollar compared to Europe with 27 member states, different jurisdictions, and of course different legal systems where, for example, the ECB has to go through a much more defined process in order to find the best solution for Europe. However, I think the Digital Euro Summit is not just talking about the digital euro, it is also talking about stable coins, about crypto assets and decentralized finance. But certainly in the first two sessions, the digital euro will be the most interesting area to look at. And in that area, I'm very glad that I can also welcome Burkhard Balz from the Deutsche Bundesbank, who is actually thinking a lot. Burkhard, I think you think a lot about the digital euro. And I know from our discussion that you look also into other areas in other regions in, well, how they make it work and then transfer it to how Europe can make it work. Because the digital euro will certainly be something which can bring new innovations to the payment ecosystem in Europe. But so we have to look at crypto assets and how we make that work, or stable coins, and whether we are too late or too early here, rather not too early, but rather too late. And in that sense, I wish you all a very, very fruitful few hours we spent together on the Digital Euro Summit. And without further ado, Burkhard, I would like to hand over to you now to give us a keynote, and I guess you will touch on the digital euro. Burkhard, it's your turn. Thank you very much. Have a good time all together.
Hi. We have to wait one more minute until Burkhard Balz arrives. But thank you very much for this interesting speech. And it's nice to... well, now we can finally hand over to Burkhard Balz. Thank you.
Thank you very much, ladies and gentlemen, and thank you for your warm welcome to today's Digital Euro Summit. Where better to talk about an innovative topic like this than at an event organized by one of Germany's largest digital associations. As my virtual participation exemplifies, the digital transformation is fundamentally changing countless aspects of our lives. We are living in times where it seems that practically everything is in a state of flux. And that is not only a reference to the fact that football World Cups are no longer being played in the wonderful summertime, but in the winter months. Changes can be observed in the world of payments as well. Driven by digitalization, new payment methods are emerging and with them new providers of innovative payment services. These developments are also impacting on central banks' roles as backbone of payment systems, prompting us to find new answers to new challenges. One answer could be to make our currency, the euro, ready for the digital world of tomorrow. And these discussions are centered around the concept of central bank digital currency, or CBDC for short. So let me begin by outlining why we are exploring a digital euro. After that, I will present the potential core features a digital euro might have before updating you on the current project status. So why are we considering issuing a digital euro? Why are we considering this to have it for the Eurozone? First of all, we have been seeing a trend towards cashless payments for years now, and that trend even accelerated recently. If we look at Germany, for instance, the Bundesbank found in its regular study on payment behavior that the share of cash transactions of consumers' daily payments has fallen to 58%. The trend is obvious. In a study from 2017, cash payments accounted for 74%. One of the main effects we saw was a growing popularity of contactless payments, in particular in the form of card payments. While roughly 20% of smartphone owners have already paid using digital wallets. Total mobile payments still account for only 3% of all daily payment transactions. It was with great interest that I read the recent results of a Bitkom survey, confirming the trend towards cashless and in particular contactless payments, which has been boosted by the pandemic. In your survey, 3/4 of respondents stated that they are using cashless often since the COVID-19 pandemic. Half assumed that they will use cashless frequently in the future, and 46% even said that they actually only have cash with them because they are concerned that an electronic payment might not be possible. So looking into the future, even though the use of cash for payments is still relatively high, digitalization will lead to a further decrease. Other countries in Europe have already seen this happen. In the Netherlands, cash accounted for a share of merely 20.5% of point-of-sale transactions in 2021. But as of now, cash is the only form of central bank money that is available to the general public. It is, however, not suitable for payments in digital environments. Therefore, it could be beneficial to offer a digital complement to cash in order to foster digitalization in Europe. CBDC would ensure that all citizens have free access to a simple, universally accepted, secure, and reliable means of payment. And just like cash, the central bank would issue it, and depending on the actual design, private individuals as well as retailers and other companies could pay with it. It all boils down to trust. A CBDC available to all citizens would ensure the stabilizing effect of central bank money and payments. One key criterion for confidence is our money is that people can exchange money they deposit with their commercial bank at any time at face value for central bank money. Public money is therefore the anchor of a well-functioning payment system and ultimately ensures confidence in the stability of our currency. But there is more to the story. We are seeing new players enter the payment market with new business models and with a good feel for what users want. Big tech players are leveraging their existing digital platforms with large customer bases to expand into new markets. A prominent example of this is Amazon, the dominant force in e-commerce in Germany, which also offers a payment service of its own. Apple Pay, as another example, is the most popular wallet service in Germany, according to our study. And there are already signs that Apple will expand further into financial services, for example, with its plans to offer buy now, pay later services. In another survey by Bitkom, 2/3 of the surveyed companies said that they are seeing new competitors from the internet and IT sector entering their markets. I found this particularly interesting, as the survey was carried out among a sample of the whole economy. Thus, this trend goes way beyond payments and the financial sector. And indeed, the ultimate destination may be the emergence of one or a small number of super apps comprising all our day-to-day activities: travel, food, mobility, e-commerce, social media, entertainment, and perhaps also professional collaboration. Of course, this comes with implications for market incumbents. In payment, there's a danger for banks of being sidelined and interchangeable settlement agents. At the moment, big tech firms in Europe rely on cooperative arrangements with banks for settlements, as payments made using Apple Pay or Google Pay are mostly settled via credit cards issued by banks. A subsequent evolution could be to create a closed payment systems, for example, by issuing one's own platform money, notably in the form of a stable coin. The most prominent example of this kind of concept was a DM initiative, formerly Libra, an idea launched by Meta in June 2019. But what are stablecoins exactly? And how do they maintain their apparent stability? Providers often peg a stablecoin's value to a currency or a basket of currencies. They therefore mimic the functions of money owing to their dependence on widely accepted currencies. However, if the reserve assets are insufficient, or if stablecoins rely mainly on mathematical algorithms to stabilize their value, a risk of loss emerges, as the turbulence in the crypto market in recent months and weeks has shown. For instance, Terra USD lost almost its entire value compared with the US dollar. Instabilities can also arise if many holders want to exchange stablecoins back into real money due to a loss of confidence, creating a scenario similar to a bank run. Therefore, stablecoins need sound regulation. Without that, they will not be able to reach a critical mass in payments, and rightly so. But there would also be the issue of liquidity fragmentation if, for example, global stablecoin were broadly used for payment purposes. And in addition, this would lead to a very strong position of the issues of such a stablecoin, with the corresponding knock-on effects on competition and market power. These privately issued forms of digital money don't go far enough to address the needs of tomorrow. And this is not a question of monetary sovereignty, but also of efficiency and transaction costs. The answer could well be commercial bank money created by credit institutions, but in a tokenized form alongside the central bank money. So let us also bear in mind that major payment solutions are run by companies with headquarters outside the European Union, such as global credit card schemes or the big tech firms I already mentioned. Thus, a digital euro could also strengthen the sovereignty of Europe in payments. The payment market of today is a well-established symbiotic relationship between the private and the public sectors. Central banks provide access to money in the public interest. They issue banknotes and distribute coins. And they also operate their own financial market infrastructures, settling in central bank money and serving as a backbone for the entire payment architecture. In this way, central banks ensure safe and efficient payments, providing the blood flow that keeps the economy alive. The private sector, on the other hand, operates successfully at the interface to the customer and drives the momentum that fosters innovation. Commercial banks run customer accounts and have a long-standing history of managing the customer experience. And when it comes to a digital euro, we would be well advised to stick to this successful work-sharing model between the public and the private sectors. Markus Brunnermeier, one of Germany's most decorated economists and a professor at Princeton, referred to the cooperation between commercial banks and central banks as the most pronounced form of public-private partnership that we have in our economies. And I can only agree with that. Preserving this model of public-private partnership will at the end be key to the success of a digital euro. So what could this public-private cooperation look like in practice? One option the European Euro system is considering is known as a payment scheme approach. The Euro system as a public actor would develop, in cooperation with the private sector, a common rule-based framework. Supervised intermediaries would participate in this scheme and use this common basis to offer their own products to their own customer base. Therefore, it is clear that the Euro system will operate neither accounts nor wallets for end users. But pursuing this approach, we would ensure standardization, facilitating a homogeneous and end-user experience across the euro area and full interoperability between the different stakeholders, and with the established payment infrastructure of banks and other payment service providers. We would be best positioned to achieve our common goal of pan-European reach. And in addition, it would respect the role of intermediaries and offer room for innovation as well as for local specificities or different payment habits. The role of the private sector would include offering wallets, for example. Supervised intermediaries would conduct KYC and AML checks, and moreover, they would provide the devices and technologies needed for payments online, in stores or person to person, in order to cover the envisioned use cases of a digital euro. And for sure, the authentication of transfers too would have to be arranged by the private sector. To give you here a better impression, an app could be used for direct person-to-person payments and also when shopping online. The analysis of these devices and technologies, the so-called form factors, is one of the aspects the Eurosystem's project on the digital euro is covering at the moment. During the current investigation phase, experts from the ECB and the national central banks are working together on aspects such as the aforementioned functionalities, design choices, business options for intermediaries, and use cases. The Bundesbank is closely involved in the project. I myself, I'm a member of the high-level task force, the steering committee of the Digital Euro project. And we have already come a long way. In October 2020, we published a report with thoughts on the digital euro. Now we are already in year 2 of the ongoing investigation phase, envisioned to take 2 years. And since we are well aware that the success of a digital euro cannot be taken for granted, we are taking our time in order to fully reap the benefits while at the same time containing the potential risks, like the danger of digital bank runs or widespread shift of deposits from commercial banks to the central bank. This is why, as part of the project, we are considering effective countermeasures that could include maximum amounts or graduated interest rates. What other aspects are particularly important in our view? We want to pay particular attention to ensuring that all citizens have to ensure a high degree of privacy while complying with all the applicable regulations. I would here like to underline that cooperation with the private sector is crucial in order to make the digital euro a success, because our research has shown that consumers are expecting a best-in-class experience with the digital euro as well. We are fully aware that acceptance cannot be prescribed. That has to be earned by offering customers what they need. Steve Jobs, the co-founder of Apple, once said that you have to start with the customer experience and work backwards to the technology. And this is also quite obvious that the digital euro should not merely replicate existing payment solutions. It must be designed to be future-proof for the next decade and even beyond that. And that also means deploying the very latest in technology and making the design flexible enough to adapt to future needs. Furthermore, the Bundesbank has clearly identified the need for a digital euro that is also ready to support programmable payments, for example, in the context of the Internet of Things or Industry 4.0, the fourth industrial revolution. All those issues are currently under investigation. By the end of the investigation phase in autumn 2023, the ECB's Governing Council will decide in close consultation with the legislative bodies of the European Union whether to launch a realization phase on a digital euro, which would take another 3 years. If everything goes to plan, the first users could pay with a digital euro in autumn 2026. Some critics argue that this time frame is not ambitious enough. However, I'm convinced that central banks should proceed with the necessary diligence and prudence, given that CBDC is nothing less than a completely new form of money. There must be no negative consequences for monetary policy and financial stability. And I think we are going about things the right way by not rushing our analysis and our decision on whether or not to introduce a digital euro. Ladies and gentlemen, just recently, the German Federal Finance Minister Christian Lindner expressed political support for the ongoing work on a digital euro, mentioning that its success cannot be taken for granted. He sees sufficient privacy and a future-proof design as preconditions for making a digital euro a success. As I have already indicated, we are well aware of this. But in my opinion, political backing is an important starting point when it comes to the potential issuance of a digital euro. On our journey, the 12 stumbling blocks of digital transformation, digital transformation recently published by Bitkom might be useful. One of the obstacles mentioned is the need to understand that change always involves jumping in at the deep end. Admittedly, this may not be a widely recognized core competence of central banks. However, we should facilitate innovations and actively support them within our mandate to ensure safety and efficiency in the field of payments. And let me close with the words of the late Theodore Levitt, a renowned German-American economist and former professor at Harvard University. I quote him here: "Creativity is thinking up new things. Innovation is doing new things. So, well, let's do it." Thank you very much.
Dear Burkhard Balz, thank you very much for your interesting insights. And I think one thing we just learned, even as Bitkom, we're not immune to technical failures. Burkhard Balz, your speech highlights why it's so important to continue the debate on the digital euro. I think you already addressed a lot of the topics we will talk about, but I really liked your call for action. I really liked the ending. Inspiring creativity to foster innovation and the courage to jump in at the deep end. Why, what, and when are clearly keywords that will accompany us throughout the whole Digital Euro Summit. Last year, we had our first Digital Euro Summit right after the announcement of the investigation phase. Now, a year later, first cornerstones have been set, but many more still need to be placed. Are we heading into the right direction? How far have we come? I'm glad to welcome some of the best in field to discuss this and further questions today. Therefore, I warmly welcome Silvia Attanasio, Head of Innovation at the Italian Banking Association, Jochen Siegert, Managing Director at Deutsche Bank, and Dr. Jonas Groß, Chairman of the Digital Euro Association. Let me start out with one question. How will you pay in autumn 2026, having heard Burkhard Balz's statement? Silvia, do you want to start?
Yes, I would say it will depend by the context. I think that as we are used today to have multiple payment means in our wallets, we will continue in this way. So we will have also in the digital world more than one single instrument to be chosen for different payments interactions.
So you won't be interested in trying the new digital euro?
Of course, I would pay to do the first transaction.
Jonas?
Yeah, I think I agree. It's generally, very broad diversity. So we will continue having cash. You can pay with credit cards, right? You can. Then I personally would agree with what Burkhard Balz said, that at least in some tryout we could pay with the digital euro. I'm not sure if you could pay everywhere in Europe with in every country with it, but I think there are some capabilities. And also, who knows? I mean, 2026 is 4 years from now. If also, we see more of the crypto stablecoin payment rails being implemented. But yeah, let's see. And I think we will have a few more digital euro summits until then, where we can see from year to year where we are heading to.
We hope so. Jochen?
Well, I've always adopted new emerging payment methods during the last, 20, 25 years, and always shared the first pains of the first transactions, especially if the merchant is not yet accustomed to the new payment method. And this is why, of course, in 2026, I will actually try to use the digital euro as soon as it's possible to do, and as many transactions that allow me to be done will be done just for the sake of testing.
Thank you very much. You mentioned the diffusion of payment methods. What steps should be taken in order to ensure that the digital euro will be seen as a viable alternative or even complement to the forms of payment we have today?
Maybe should I start?
Sure.
And then Silvia can of course continue. So I think what we have seen is also within the first year of the Digital Euro project, there has been lots of progress made, right? About some design choices, about some distribution models. We also know regulation has to be adjusted, right? So it's really not an easy thing to do. And I also understand why it takes such an amount of time, right? I think what we shouldn't forget, and this is also what we often are saying via the Digital Euro Association, is that the digital euro needs to be somehow attractive, right? So we've heard from Silvia, Jochen, and from myself, we would try it out, right? But it's probably not enough, right? So it should be a payment method that also has substantial market share. So I think it's important to seriously think about which benefits can be added, right? So also what Burkhard Balz said, which features are maybe unique to a digital euro, right? Or even like better in compared to other forms of money. And I think this aspect is, from my perspective, not properly been addressed in the Digital Euro project yet. I mean, we still have some time, right? But I think it needs to be addressed, because otherwise it could be the case that, as in some countries where we had CBDCs like Finland and Ecuador, where the projects didn't continue, then in the end, there is also the risk that it's not becoming that successful because people just simply don't use it.
Jochen, Silvia, do you agree?
I fully agree. So the challenge that we have is, if you talk to an ordinary customer outside in the street, they usually don't have any problems anymore to pay. So they can pay online, they can pay at the point of sale with cards, with cash, and with alternative payments, with the watch, etc. So from that point of view, there is currently no real problem to be solved. And this is why the importance for the development of the digital euro is that it, to some extent, somehow provides a value proposition that differentiates the digital euro from the existing payment schemes. And we also have to think about the fact that we're talking about 2026 and further. So whatever we see as payment methods today, they will also evolve. So Jonas just talked about stable coins. We will probably by then have stable coins. And therefore we have to anticipate what is happening in payments in the future while doing the design choices more or less today.
Let me just follow up quickly on that. What is a possible value proposition that would make the digital euro worthwhile to use? Or maybe even you can answer, Sylvia. You nod your head. I don't know who prefers to answer.
Yeah, sure. I fully agree with what Jonas and Jochen were saying. I think that we should leverage on the programmable payments that also Mr. Balz mentioned to try to design new dynamic of payments that can solve new problems, or better, the problem we already solve with some of the most burdensome instruments we are used to have nowadays. But if we expect the project by the ECB and every kind of central bank to be more customer-centric, I think we are wrong. This is a call to action for commercial banks. It's our own mandate, using their words, to be and to build innovative services for our customers. We cannot expect any central bank to be focused on this. They are focused on financial stability, and this is a very good news for banks. We must be focused on innovative services and value added for our customers, both citizens and businesses.
Jochen, I see you nodding. Jonas, do you also agree?
I think this innovation aspect, what Sylvia brought in, is really, really important, right? Because this can be, like what Jochen said, like a value proposition, right? Because something the existing payment rates cannot do today. I mean, maybe stablecoins can do this in a similar, efficient way, right? We will see over time. But this is definitely, an angle to take. I'm personally not too sure if this is the road the ECB will go, so I would hope so, that these are business models that are leveraged via the digital euro, and that would be a clear value proposition. Otherwise, I think a dimension which is often also not in the focus of the discussion, but I think really, really important now, is the aspect of cross-border payments. I know it's kind of in between wholesale and retail CBDC, but we do see in China a lot of stuff is going on with the CBDC, right? And we also see the political development. So we don't know if maybe a situation materializes in a few years where, for example, goods can just be exported if paid in the domestic currency, right? Which could be the Chinese or Russian currency. And I think even if this seems to me currently kind of out of scope for the digital euro, at least for now, right? I think this is a design dimension to be considered, because this could also kind of change kind of overnight, that we need a digital euro that is basically available globally to also foster the role of the euro and not, lose, let's say, market share against other non-euro denominated forms of money, which could be like CBDCs, but also private sector solutions in the end.
Following up on that, would you envision a unilateral issuing of the digital euro, or would you hope for a multilateral approach where countries then, or central banks then, essentially come to a point where they find suitable solutions so that the CBDCs can operate have efficient interoperability?
If I may jump in, according to the latest BIS report, nine out of 10 central banks across the world are working on their own CBDCs. So I think any kind of unilaterality has been ended in, I don't know, probably 2015, something like that. So we are going into a world where fiat currency is transforming in a digital way. That's why I consider very important the work that the BIS is doing to experimenting several solutions for multi-CBDCs arrangements, even though it can sound a little bit too early for this. But if central banks would be able to collaborate, at least in some way, it would be possible to start in the right way to enable an interoperability that cannot be fully applied when everything has been designed by different jurisdictions. For sure, CBDCs will not be the same across different countries, because a currency and a coin is not simply a coin. It incorporates much more of this. It incorporates our democratic values. It incorporates the way different jurisdictions look at their own citizens. So we will forever have some regulatory disalignment and problem in some way that cannot be solved by any powerful platform across the world. So cross-border payments would continue having some of the difficulties we can see nowadays, but from a technical point of view, they can be enhanced and benefit from this solution. So it's good to start from the very beginning in collaborating. And for sure, I believe that we will have a multi-CBDCs world.
Jochen, what do you think?
I agree with what Silvia already mentioned. I'm a little bit skeptical that we will see the interoperability between the different CBDCs on the CBDC level, simply because of the fact, just looking at the digital euro, it's already a massive, very big project to bring in the alignments of the various European states and the various stakeholders. Now adding another level on top of it with regard to providing interoperability with different jurisdictions and CBDCs will actually make the project even more complex. So in that point of view, if you look at intermediaries today, they are anyhow providing multi-currency, multi-payment methods and cross-border solutions. So I use my card, and I use my card wherever I see that logo, irrespective if it's in my hometown, in my home country, or somewhere else cross-border. And I would expect the similar thing to be handled by intermediaries in the background, that the customer or the end user does not realize it, and the merchant doesn't need to take care about the various difficulties to implement various CBDCs, but actually that is then be done and handled by intermediaries. But we will see. It's not yet clear. ECB just came out with a couple of questions specifically in that area.
Well, it'd be advantageous if we'd already know what the answer would be, but we cannot predict the future. Silvia, you talked about the democratic values, so values that are imbued to one's currency. So do you think the digital euro also has a big political dimension?
Yes, I think so. Last week, we all turned to Brussels to listen what the European Commission were saying. We listened very loud and clear the voice of the Vice President of the European Parliament saying that the digital euro is unstoppable and inevitable. So I think that now it's time for the co-legislators to work on the proposal of regulation that will set the stage for the ECB to decide if the digital euro would be finally issued. What I see is that there are no shortcuts when looking at the digital euro. It is a complex issue. It requires study and a deep understanding of the details. So it's not possible to simply state that privacy should be preserved while AML controls must be at maximum. So there are a lot of complex balances that must be managed, and this is not easy. This is a technical design aspect, not a political one.
Yeah. So Silvia, you mentioned anonymity. Jonas, one of the most debated features is anonymity or privacy. How far can anonymity, privacy go with the digital euro? Is it valued enough in current considerations?
Well, so let's start with the first part of the question. So in theory, I think in terms of the design, it is actually a full spectrum. So I think the digital euro could be from full transparency towards the central bank, which I also have to say is out of scope for now, until full anonymity. So we do have seen a few technical proposals. I mean, a few colleagues and myself worked on one, but we also seen one with Thomas Moser from the Swiss National Bank and David Chaum, which is now prototyped on the BIS level, that you can preserve like really full anonymity if you want. So I would basically argue that it's not that kind of a technological thing. But what Sylvia mentioned is also really important, that there's of course a trade-off, right? So if we have a full anonymous payment system, and the ECB doesn't want that, and I also don't want that, to be honest, you cannot monitor money laundering, terrorist financing, etc. Right? So what I think is a quite smart approach, at least from my perspective, is bringing basically limits for anonymous payments in. So if we think about today about e-money, we can pay fully anonymously until a specific monetary limit, and afterwards we know we have to reveal who we are, we have to provide KYC, and this is also the features that cash provides, how cash works in most jurisdictions. And I think that this is also a smart model for CBDC. And the great news is, as I said, like full anonymity until a specific limit can be reached today from a technological perspective. And it's more than, to your previous question, Lucas, a political dimension. And I was very welcome that Christian Lindner referred a few days ago, or also said that he wants, or he was in favor of having cash-like privacy, which is, also this kind of limit on anonymous payments approach, but it is about anonymity, or basically to allow anonymity, which I think is, as I said, a smart approach. But here we need to be careful, because people have lots of different ideas about what anonymity means, what privacy means, right? So if we, it should be then a model where we don't need to trust an intermediary like the ECB to preserve privacy, but really provides privacy by design. And this is, of course, also a very, political topic in this dimension.
Yeah. Having brought up the political dimension again, I'd like to take a quick leap and talk about European sovereignty, as it already came out in Burkhard Balz's speech. Often sovereignty is one mentioned aspect as one of the reasons for digital euro. In September, the ECB announced to cooperate with several companies to develop interfaces, front-end cases for the digital euro. Amongst them, the company Amazon, a large American company, for the use case e-commerce payments. Do you think it's the right choice?
Well,
sorry.
Yeah, sorry, go on.
Just to break the ice that comes out when this topic is mentioned, I would say that from the very beginning, we advocated the ECB to work with an open innovation approach. But it's very difficult to be open when innovating, when you are also a central bank subject to a series of scrutiny from different fora and different also political bodies. As we listen to their words, to what Mr. Panetta said also in the Econ committee, they are just experimenting and learn from them. And they needed also to understand how to integrate into different businesses. On the other side, we should all be aware of the need that a digital euro would be an instrument for strategic independence of the EU. So we all have to work for this high level goal and to help also, if needed, the ECB to work on this, avoiding any kind of unintended consequences that could release an advantage which is not intended, and a disadvantage for domestic operators.
And maybe to just add one sentence, Sylvia, you also mentioned the letter from Fabio Panetta from the ECB to the Econ committee. There it was actually said, I quote Mr. Panetta, Amazon was the only merchant that replied to the call for expressions of interest for the use case of e-commerce. So if my interpretation was they were the only people, the only company that applied for the e-commerce use case. And this then, of course, if this is right, and if I'm interpreting this correctly, then this, I think, is also kind of an answer to the question, because then more should have applied, right? Then we didn't have this discussion on the first hand.
Absolutely. I also wanted to make that point. It's about who actually applied for it. And with all honesty, Amazon, yes, it's an American company, but it's one of the largest, if not the largest, European online merchant. if we roll out the digital euro, of course, we want to see the digital euro being accepted in all those places where we shop on a daily basis. And Amazon clearly is one of the key first go merchants if you think about e-commerce shopping. And therefore, I think it also helps for the digital euro that a player like Amazon is getting involved and is providing the front ends for the ECB with regard on how to shop conveniently online. Pay, not shop, pay.
No, thank you very much. It's quite a unanimous opinion compared to what you could read in the newspapers or several outlets. That's interesting. Looking more at other jurisdictions, how far is Europe actually in digitizing its currency?
So you mean compared to other countries, right? Yeah. So I think it was Sylvia mentioning that like 9 out of 10 central banks currently look into CBDC. So it's really a lot. And we do see some countries that are already live with a CBDC, which was like Bahamas in 2020 as a small island nation, also Jamaica. We do see obviously China that is now officially for 2.5 years in the pilot mode. So officially not fully launched, but I think live in 15 jurisdictions. So they are, from my perspective, kind of the pioneers. And I think the ECB is one of the central bank that is in the investigation phase, so still quite early, but compared to the other countries in this phase, like US, UK, I think the ECB is actually pretty far. So I wouldn't say a world pioneer, but within the class of not having decided yet if a CBDC will come, rather on the top end when it comes to in terms of timing and time to market maybe as well.
Saying that it has not yet decided if a CBDC should come, what would be the consequence if a CBDC wouldn't come?
We would most probably see the dominance of foreign CBDCs or foreign private stablecoins. I really see the world out there moving very fast. So there is a competitive pressure around the currency, which is very strong. So we should better evaluate the risk of not acting, which are, in my view, very higher than the risk of acting.
And we just need to have a look on the non-state initiatives in crypto. Also, we all know the crypto scrutiny also after last weekend. But if we look at the traction that some of stable coins or programmable payments have already got, it is already significant today. And we're not talking about 2026. So Ethereum in 2021 had made 4.5 times the transaction compared to Visa, which is significant. And the stablecoin of Circle built a complete ecosystem around the USD Circle coin, and also established a Euro stablecoin, not in Europe, but in the US. And it's, as you said, if we don't move, someone else will fill the void, and there is a market need out there.
Now you already addressed some of the topics we will talk about in the next panel, but let me just go ahead and ask the question, do you think that the digital euro is a reaction towards stablecoins and private initiatives?
Well, if I may start again, so short answer, yes. So I think Libra DM, the announcement was the day basically where most of central banks got active. So the concept of a CBDC is like actually more than 30 years old. So it's nothing new, but blockchain technology and stablecoins, primarily Libra DM, brought this up. So I would say totally yes. And I would also agree what Jochen said, like if we don't have a CBDC, stablecoin payments will emerge further. We currently do see, even with like Bitcoin Lightning, more crypto payment, Bitcoin payments at the point of sale, like South Africa and one of the largest retailers has accepted Lightning payments in all of its stores, so this is things that continue, and they will continue, as well, and probably even further or quicker if we don't have like a digital euro in the next 5 or 10 years.
What do the others think?
If I may, I think I'm going back to the idea of pioneers. There are other simpler, if I may, countries compared to Europe. I think there are a lot of lessons we can learn from. made by them, by the initial steps that are made by, you mentioned Bahamas, but also I would say Nigeria, Ghana, and Zaire. There are a lot of countries that are working very, very hard, and a lot of lessons that we can get from them. For example, one of the things I found the most interesting is that you cannot target financial inclusion as a sole objective for a digital euro, because the network effect is a very powerful stuff. So it's needed to build a product that can satisfy also more sophisticated needs in order also to get the financial inclusion objective you will have. So a cooperation with the private sector is really important and is underlined as important even in the countries where the financial industry is not that developed as it is in Europe. So even more in Europe, the collaboration between commercial banks and the central bank would be leveraged even more than what is happening nowadays.
Jochen, do you have anything to add to that?
No.
Nope.
I can just repeat what was already said. So,
well, perfect. Now, jumping to a bit more technical question in the last 10 minutes or so we have. There's currently a discussion on if the digital euro should be DLT based. What is your opinion on that?
Maybe I start,
yeah.
Because it talks a lot in the last question. To be honest, when we look at previous technologies, you always had, when you look at failed solutions, you always had attempts where a technology is looking for a solution. And also Burkhard Balz previously said, or quoted Steve Jobs, who said, let's talk about the value proposition of the client and then look about the underlying technology that is able to serve that and not vice versa. So to be honest, I couldn't care less if it is really a blockchain solution in the back or not. What the problem is or should be solved is, for example, programmable payments. And if the programmable payments is being triggered and stored in a traditional database or in a blockchain, is irrelevant for the customer on the street and the merchant on the street making the payment. So in that point of view, if we go back from technology and look on what actually problem are we trying to solve and what technology suits best for that, what technology scales best, what technology is stable enough, then we should actually look for that technology and not think first, oh, it has to be a blockchain technology, and try to find solutions how to make that blockchain technology work.
Sylvia, you have quite some experience with DLT projects, especially due to your Spunta project. What do you think is the best technology?
I fully support what Jochen said, that technology must follow the policy decisions. By the way, I think that we are facing something that is very promising and that can really transform the way we consider things. So we can say that if we need to go from Milan to Frankfurt, a horse or a car would be basically the same if we have a horse that is fast enough. But if we want to go there and to be there really quickly, we need an engine and we need a car. This is what we have experimented with Italian banks. We started by the end of the story, imagining that the digital euro were already issued, just asking for it to be programmable, or even better, to allow programmable payments. And the speed, the simplicity, the flexibility we experimented is something that we definitely put on the requirement lists for the digital euro. So we want that kind of programmability. From our experience, it comes only from DLT, but if someone has the solution to do it with other technology, no problem. But I think that in the end, for that kind of programmability, we will need DLT.
And I think maybe to just add one sentence again to what Silvia said, I think it's important that it's like a fair race, let's say, a fair challenge, right? So I agree what Jochen said, like you define the goals. For me, they are not 100% clear, then try out different technologies and then pick the one that performs best, right? I think that's a smart approach. And as Sylvia said, if this is DLT, then one should go for DLT. I personally, I'm not an insider, so I don't know, but reading between the lines, I have the feeling that this, this competition is always open, right? So what I mean basically is that I'm not sure if the goals are defined and then different technologies are tested, like on permissionless, permission DLT, I don't know, hardware-based instruments or not, but this is just my outside perspective. I could be totally wrong, but this is just my 5 cents to this technology question.
I really like your analogy, Sylvia, when you talk about a horse and an engine, both fast enough. And then I like your analogy, Jonas, talking about a fair race. I like to see that race. But anyhow, going back to the programmability, what specific use cases do you see with the programmable digital euro?
Let me explain you one learning that I had when I was at PayPal. PayPal was the first payments company, if I recall rightly, that opened up its complete platform for external developers. We, from the internal PayPal side, clearly had use cases in mind that we said, okay, those will fly and those will probably not fly, but let the developer do their work, and then let's see. And the learning was that if you actually provide APIs and provide programmability and provide access, but do not define use cases, then the use cases will be defined by the public. And the learning was things and use cases that the internal well-paid product developers with super long experience have thought would fly. They hadn't been successful on the developer platform, and use cases that we never thought of actually exploded with regard to the use cases. And therefore, I'm a little bit hesitant to open up that use case discussion, what use cases are good and what use cases should we not prioritize. I'm actually pretty open to say, let a platform provide APIs, and then let the market and the intermediaries who have their business models define the use cases on the platform. And of course, you can actually start with a couple of standard use cases that you could provide as a preset to give some ideas to the market, but let the market decide. That was one of the key learnings of PayPal, and other payment schemes like MasterCard and Visa followed that route. So it probably was not that false what PayPal did at that time.
So let me quickly follow up on that. So you say it's much better to define standards than actual use cases, so in a way that they all can operate between each other?
I would say provide an open ecosystem that other corporates, merchants, users, payment service provider, intermediaries can build their use cases on top of it. You can also offer standard use cases, and we saw that ECB said we want to have online shopping, we want to have POS shopping, we want to have P2P shopping. Those are use cases, and you can actually provide those use cases as a preset on that open ecosystem, but then let it up to the market to decide what other use cases might follow, what other use cases might have a strong demand. And again, we're talking now 2022, and basically the product will go live 2026, and it should be open also for the future development beyond 2026. And it's really difficult for even the best product managers to be so bright to actually think about what are the use cases that are going to be successful in 2028 or 2029. And you can actually solve that problem by providing basic use cases and provide an open ecosystem, and then let other people, other developers, other intermediaries develop their own use cases.
Sylvia, I already saw you nodding, so I take that as you agree with Jochen. And Jonas, do you agree as well?
I agree, but if I may add something, I think we need the right raw material. As it happens with the World Wide Web, the first use cases, let me say, were something similar to a sort of yellow pages, so not that innovative. But then on the same web, we are now using this platform and having online events, which no one were able to imagine at that time. So give us the right raw material and let the market do the rest, and we will have fun enough.
I think nothing to add. That's really perfect, and I like this collaborative approach, because central banks typically and also let's say not always very popular or not well known for being the most innovative people. So if you then have innovative people programming on the platform, that will be a huge benefit. And I like this API approach, or even let's say open source, like some central banks try out. I don't know, but at least open it up to the community and to the market is a great idea.
You mentioned,
and if I may, sorry,
of course.
This is not read as an excuse for banks to just wait and see. We have to start learning and understanding what we can build thanks to this platform in the very near future. So now it's time for banks to work and to train on the future possibilities. Otherwise, we will see nothing on 2028.
Jonas, you mentioned collaboration. Jochen and Silvia, you are part of the MEG. And how far does the ECB take expert voices into consideration? Do you feel that there has been a change?
I think they are improving. I think they are understanding even better how it could be functional to their approach to clearly separate the roles and responsibilities between the central bank and the commercial banks. In this way, I'm seeing an acceleration in collaboration. If I may, I would like to see another step forward.
Yeah, and maybe so I would agree. So we are, for example, also as one of the think tanks, part of the civil society like kind of dialogue with the ECB, which I think is a really great thing, and great that we are heard, and also our other NGOs. I would envision to have like more meetings, because we had a meeting like six months ago. So I would love to have more dialogue, and always, this is basically, if somebody's listening, also always the invitation with our Digital Euro Association, with like 700 individuals, a few central banks, and 60 companies from all spaces, to basically, and academics, also don't forget them. I think it's really a collaborative effort, and it shouldn't just be a few people. It should really all the brain power of all the smart people that are out there. And so I would also like to see a next step, as Silvia mentioned.
Jochen?
Fully agree what was said, but just think about, or put yourself in the shoes of ECB. You have so many diverse opinions and requests going to them from various countries with complete different backgrounds. It is difficult to actually then make a call and say we're going that direction, because you always have people who say no, it's the wrong direction, etc., etc. So on the one hand, they are very open to gather inputs. At the same time, and I think that is necessary, they make their own calls, because if you try to make it like working for everyone, it will never work. So not only you need at one point in time make a call. It is like that, and we stand behind it, and we have taken all the inputs under consideration, but they really need to make that point, and I think that is a pretty difficult decision if I were in their shoes.
And I think that's the perfect ending to our panel. Initially, I wanted to ask you the stablecoin question, but somehow you came ahead of my plan and made this transition a bit harder for me. But Jochen, Silvia, and Jonas, I'm very thankful for this discussion, and it was very nice, and I hope I'll see you next year at next Digital Euro Summit. And now, without further ado, I will hand over to my colleague Kevin, who will moderate the next panel on stablecoins. Thank you very much.
Lucas, thank you so much. What a kickoff into today's second Digital Euro Summit. I guess you guys made a great introduction into what's to follow. I think if we look at the innovation of payments, if we look at how payments are developing over time, I think it's always an interplay of institutional players, state players, politics, but also the private sector. So speaking of CBDCs, of course, what immediately pops up, we also have to speak about stable coins, where at least at this stage, it seems we have come much further down the line than we have with CBDCs. If that's true so, and what are the challenges ahead, and how Europe is positioned in that regard, I'm very happy to discuss with three renowned experts in the field. First of all, I would like to welcome Tina Baker-Taylor on stage or on our virtual stage. Thanks for taking her time. She's Vice President of Policy and Regulatory Strategy of the UK and the EU for Circle. For those of you who haven't heard of Circle, for the unlikelihood, you probably heard of USDC, a stablecoin from the US. Tina, as far as I'm concerned, you have some great plans for Europe, about which we will hear in just a minute. But let me introduce the other panelists first. Let me also welcome on the stage Dorothea Isenburg, Dorothea from MasterCard, where she is working as Vice President Business Development in the crypto segment Europe. Dorothea, great having you. I think you cannot have this discussion with one of the global payment actors currently, so we are pretty interested in what your stake is in stablecoins and what your view is on the development in the fields of payments. And last but of course not least, Jan Zeysens from DG FISMA from the EU Commission, one of the, if not the influential digital finance actors in the European Commission and in the EU as such. Jan was very much concerned with the digital finance package as a whole, and in that capacity, of course, also with MiCA, the markets in crypto assets regulation. And as many of us know, it was quite drafted with Libra and Diem back in the days in the mind. So what we are going to do in the next couple of minutes is to see how regulation, how innovative players, and how in a very dynamic field different spheres are going to take place. But maybe to kick this off, I want to start with something Burkhard Balz also mentioned briefly in his introduction, which is Terra Luna. I mean, it seems we are currently hit of different crises after time. We will talk about this in the crypto assets sector a bit later as well. But having a look at Terra Luna, just quick question to start off. How stable are our stable coins, and what does this do in terms of reputation and building trust, which I think is important? Tina, maybe just a quick intro. What are your thoughts on this, and what has this done to the sphere of stable coins?
Sure. Well, thanks very much for inviting Circle to join you guys today. It's a pleasure to be here. I think that the Terra Lunar collapse really brought to the forefront that the term stablecoin isn't great in general, and that there were a number of tokens that were really stable in name only. And I think also the understanding around how a token is stabilized is critically important. And that, you know, the mechanisms by which collateral is a part of that stabilization mechanism is also critically important. So from Circle's perspective, you know, we really see USDC and Eurocoin as digital currencies. We don't refer to them as stablecoins, and if we do, we refer to them in the context of payment stablecoins. So they're 100% backed, one-to-one, fully reserved in the asset that they're denominated in. So the backing for Eurocoin is 100% euros. The backing for USDC are cash, US dollars, and high liquid, you know, assets. So treasury bills that are, you know, redeemable within 30 days. And I think that trust and transparency piece is the most critical. So, you know, we are regularly audited. We post, you know, proof of our reserves every month. They are attested to by, you know, accountants and Big Four, but equally with our treasury assets, you know, those you can go into and see exactly which assets we're holding and when they mature, et cetera. And so I think that level of transparency is kind of a key to establishing that trust and then maintaining that trust. But equally, the structure of the token is critically important, as well as kind of the governance and fiduciary responsibility around, managing other elements of your business. And I think that, over the course of the last few months, we have seen that, risk assessments and risk appetites can potentially impact business models that may have not baked those kind of risk-taking activities into them. So ultimately, if you're going to offer a asset for the means of payment that is truly meant to be stable, then that collateral and that reserve that is always redeemable, one for one. Circle happens to hold our reserves in regulated financial institutions. I think is empirically critical. That is not to say that at some point in the future, maybe somebody figures out how to offer, programmable money that is, stabilized in some way by an algorithm. But today we have not been able to crack that. And so therefore, I think that those demonstrated reserves are really the key.
Tina, thanks so much for this introductory statement. Speaking of governance, transparency, I think you mentioned the important aspects. We're going to dig a bit deeper in just a second before handing over to Jan, for whom I guess stability is quite one of the main drivers when talking about stablecoins. First, I want to hand over to Dorothea. Is there anything you would like to add from your perspective to what we just heard from Tina? Oh, I'm afraid. I hope it's not just me. Maybe quick sign if we have some problems with the sound.
Fantastic. No, actually, from a Mastercard point of view, it's very similar. I think what Tina just mentioned on the Circle side. So when we engage with stablecoins and we engage with selected stablecoins only, we always focus on stability, compliance, and consumer protection. That is absolutely key and paramount, and we are very diligent with that. And Terra Luna, to be honest, did not fulfill any of those criteria simply because they are algorithmic based. And I think the collapse very much showed that Terra Luna was not able to maintain it back on the algorithm that they had set up, meaning that for us, the stability criteria was 100% not fulfilled. And we always look for stable coins that also have the cash or cash equivalents in the bank account backing up the stablecoin, maintaining the peg. So that's what we understand under stable. And that's how we make our selection when we decide to engage with those types of stablecoins. And when we come to means of payments, it's the same, but just to underline, at the moment, we do not see a lot of use in terms of payments. At the moment, we see that stablecoins are actually being used for investment purposes for traders to move in and out of cryptocurrencies or digital asset positions. So, but that doesn't mean that this is going to change in the future. But to be clear, when Mastercard decides to engage with any kind of stablecoins, they need to fulfill those principles.
Thank you. So I guess an agreement on that front. Jan, I guess you're happy to hear that. Maybe from your perspective, I mean, it's been an exhausting journey, I think, until we reached now toward what I would say a final text of MiCA. You've talked to several players in the field. If you can just give us a quick rewind of what the last couple of months looked like. I guess you've dealt with similar questions with different players in the field. What are your thoughts on the terminology stablecoin? As Tina mentioned it, is it actually the right term? Do we need different terminology? And how maybe this is displayed in the MiCA text we are currently expecting?
Yeah, thanks very much, Kevin. And indeed, I think it's a topical issue, and I think Terra Luna are certainly events which are relevant. But I would add that, of course, stablecoins also it's one thing to look at the issuance, and then of course it's the whole ecosystem which basically is also relevant. So I think I mean, in that sense, I think we are from our side quite happy that when we proposed indeed this MiCA regulation now 2 years ago, and as you said, Kevin, I think this was still very much in the context of the Libra discussion. we decided on purpose not to go only for a narrow stablecoin legislation focused on the issuer, but really we thought it's important that indeed all parts of this market are basically subject to regulation and supervision. I think the issuer is of course key, and it's stability, and we do not use the term stablecoin on our side because unfortunately in the end many people used to use that name turned out not to be very stable. I think we are based on our, let's say, regulation. We rather want to speak about e-money tokens indeed, or asset reference tokens in a way, depending what the reference is. That's, I think, then now the regulatory term here basically, and I think that's also in the end what it boils down to. It's some kind of e-money in tokenized form, which would be on the market. But indeed, as I said, we also make sure that then the trading venues and the wallet providers and others are subject to proper regulation, and I think that is as essential, I think, as the issuer him or herself basically. So how have the last weeks and months looked at this? Well, I think we have been finalizing, or the Parliament and the Council here in Brussels have been finalizing indeed legislation on this. I think we are quite happy that we got agreement on this in June this year. So really now I think it is clear roughly what is the framework for stable coins in Europe. It's clear what are the rules for indeed banks if they issue such coins. It's clear what the rules are for non-banks if they issue them, and what are the rules indeed for the other parts of the ecosystem. And all of this now people have, I think, a good year, 1.5 years of time to prepare, and then as of 2024 this will be binding. I think we have at the same time, of course, continued to observe what's happening in the markets and every time checked. And so, well, I mean, how would this have changed if we had these rules in place? And we've done that here, but we've also done that together with our international partners in the Financial Stability Board. And I think so far we have seen, unfortunately, I would say, plenty of confirmation that all those rules which we are putting in place are actually urgently necessary. And that unfortunately we cannot do without them. I mean, we're not regulating for the sake of it, but it is very clear that there needs to be much higher levels of confidence of investor protection in these markets if they were able to survive. And so in that sense, I think all the events unfortunately have rather confirmed that this regulation is necessary. And so in that sense, we're quite happy that it will now also come into force relatively soon. And then we really, I mean, also to make a bit the link to the previous panel we had, I mean, you know that we are also working on a legal framework for the digital euro. We really see, and the digital euro is, as I think also the ECB points out again and again, and Bundesbank and others, is indeed, let's say, has the purpose to make public money available in the digital area, in the digital age as well. That does not mean that it needs to replace private payment solutions, and we see this rather as a kind of a moving. I think that's also what Christine Lagarde speaks about, often moving the hybrid, let's say, model of money, public and private, working together, actually also to the digital age. In that sense, I think we can very well from our side imagine a number of use cases where stablecoins can maybe be the payment selection of means of choice, provided that they are well regulated, and which is not the case today. And so we have now with the MiCA framework indeed the cornerstones for that in place in Europe. So indeed we also now of course need to implement on our side, but also are curious now to see how the market will indeed transform and change and also grow into this framework.
Yeah, and thanks so much. Quick follow-up with you directly. Maybe two questions. The first one, how do you assess the situation that we are currently dealing with? I hope you excuse if I put it that way, like with a twofold approach toward the digital euro. So what is happening with the central banks and what is also currently happening at the EU Commission? I mean, this is aligned, but in some way, shape or form, we have like two processes going on. How can we make sure the market or there's good discussions with the market so they know what to expect toward, and I recite Burkhard Balz here, 2026. So how can we ensure that everything works smoothly in that sense?
Well, I think the digital euro is of course in the first instance as the euro in itself, it's public money, so it's the business of the central bank to issue it basically. But it is also a significant step to indeed move the euro to the digital age. So I think there's really a consensual view of everybody around, whether that's the ECB, whether that's the co-legislators here, that there needs to be a legal basis for that. And if you look a bit around the globe, I think that's pretty much also the consensus from other central banks or other kind of policymakers. And so that's really our job here, basically. I mean, don't worry, we're not going to replicate the ECB or kind of have different ideas on certain of those things. Our job is to propose a legal basis for this digital euro, and then to enable the co-legislators, so the European Parliament and the ministers, to basically put in place this framework and to make this fundamental policy choice, which is that we should have a digital euro or possibly not. And then on that basis, it's the ECB's job, of course, to create the digital euro and to issue it when that's deemed necessary. And we are coordinating very, very closely with the ECB on this. I think there's no day where we don't have contact with them, with each other. And we had recently co-organized here in Brussels a big conference as well. So that was one of the examples. But I mean, so close coordination, but don't worry, in the end, I think it's very clear what the responsibilities here are. It's a fundamental choice, so it's for the regulator and ultimately for the legislator to decide whether we're going to go there, and that's what we're preparing. But the implementation and the technical design and this stuff, that is, as for any currency, is the job of the central bank.
Thanks, Jan, and thanks for that. And also happy to be part with our members, part of this conversation going on in the future. Maybe one quick detour before we dig deeper into the field of stablecoins. You alluded to it, what happened in the last couple of weeks. And the point that I want to go to is when we talk about MiCA those days, we always talk about the huge potential Europe has at this stage to actually shine a light globally, so that standards that may be set in Europe will also become the standards in other jurisdictions. I mean, it's a tricky question, but let's assume MiCA had been in place already 4 years ago. Do you think what had happened in the last couple of days on the Bahamas could have been prevented? Or to put it differently, what do you think, maybe to start with you first, Dorothea, what is the potential of MiCA in terms of becoming a global standard in the near future?
So first of all, I cannot comment in much detail on what happened on the Bahamas and in relation to what could have happened if MiCA would have been in place in the Bahamas in that case. But what I can say is that from the MasterCard point of view, we very much welcome MiCA and the regulation and the clarity it will bring. From our point of view, will definitely reduce the fragmentation across Europe. It will definitely lay down the rules that we desperately need to bring this ecosystem forward in Europe in a secure manner. It is much clearer for our customers what they need to comply to. So if they're talking about CAS, so crypto asset service providers, it is also much clearer from our point of view how issuers for e-money tokens and asset reference tokens, what they need to comply to. And that is, for us as a private market player, very, very helpful to navigate that space. And we are very hopeful that it will reduce the fragmentation going forward and facilitate our work in that space as well. What I do want to mention as well is that we are strongly supporting the same business, same risk, same rules principle. And I want to say that from our point of view, probably there will be iterations of MiCA coming after. So, and we think that at the moment there's still a bit of a discrepancy in terms of end consumer protection for e-money tokens and asset reference tokens. So how we see it and how we understand it is that the e-money tokens have a bit of a stronger end consumer protection, which from our point of view is essential. If you have a payment, if you consider it for payments, then asset reference tokens.
I mean, this somewhat goes back to what we had a second ago. Jan, I see you taking a note, or I'm getting it wrong. Is there something you wanna add here to this discrepancy?
Well, I mean, I think in general terms, we have quite conservative rules, I would say, both for e-money tokens and asset reference tokens, to the extent that some people say, will these asset reference tokens, especially will they ever exist actually based on these rules? I mean, that's not for me to decide. We think that's the rules which it takes to actually, if they were to exist, to do them in a stable way. I mean, I think there's, of course, one very fundamental difference in nature between, let's say, a single currency token and any other token, basically. For a single currency token, you can have a redemption right at par value. So basically, you buy it for €1 and you will always get back €1 in a way. I mean, the moment you mix different currencies, the moment you add other assets in a way, you cannot have a redemption at par, at issuance, basically, or at, let's say, at purchase. Because precisely the very purpose of such assets, then non-fiat currency token, is to actually reference other, let's say, assets than just one token in a way. And the moment you do that, that means, of course, that there's a certain, let's say, if you want risk, if you want for the user. And I would fully agree with you, Dorothea, that means that then the use for payment purposes is much more complicated, basically. And so I think in that sense, I think also Mika makes a very clear distinction. E-money tokens will be clearly recognized as funds under the PSD as a means of payment. I think for the other tokens, that is a much less, let's say, clear issue. So yes, there are differences which are justified by the nature of the instrument, but I think we are quite clear also in the names and everything else, also what let's say that means in terms of what's the best, the ideal use for the different kinds of tokens.
Interesting, Jan, and I think quite a clear message here. And Tina, I think this perfectly plays toward your plans, or also toward your current businesses. In that regard, also from an international perspective, how do you assess Mika, and with your learnings from USDC, maybe if you can give us a brief idea what your plans are for the European market and a potential European stablecoin in that regard?
Sure. So Circle is very supportive of Mika in general, for the reasons that Dorothea and Jan have both expressed. I think there is a huge benefit to bringing various multiple market actors into the regulated perimeter, especially when there's counterparties and interdependencies between these market participants. I think the one thing that I would point out when we're looking at harmonization and the idea that other jurisdictions will harmonize against Mika, and Jan and I have talked about this exhaustively, so he's going to be bored for a minute, but the beauty of the e-money regime that exists in Europe and UK and a few other jurisdictions is that kind of natural correlation to what a single currency token or backed token or digital currency provides. And so there is an easier way to apply the same risk, same regulation principle that Dorothea was talking about. When you look to other jurisdictions like the US, they don't have the e-money concept. And so then the language around what this type of asset is kind of becomes complex and important. And then you potentially have the opportunity to create a regulatory structure for these types of assets that doesn't necessarily need to conform to something that exists today. And I think within that, there could be some potential friction where we look to harmonize. And I would hope that we would be able to do that on principles, not necessarily on, what we call these things. But from my perspective, obviously you think e-money and you look at a digital currency like Circles, and it is easy to see the similarities. Circle has launched a euro-backed stablecoin. We did so in June. And our intention is to absolutely onshore that value proposition in Europe and be Mika compliant, once that is available. And we're taking steps to ensure that we are. There are some provisions within Mika that potentially cause some complications for our existing stablecoin, USDC. And I think one of the challenges that I think that we as a global community need to take a look at, if we're going to look at harmonization again, is that kind of global flow of value that doesn't necessarily take into account the jurisdiction that it's moving through or moving in and out of. Going back to the same risk, same regulation, I think I can think of a number of payment systems that go in and out of Europe that don't have transaction caps on them. And so to impose transaction caps to digital assets that could be serving a number of different types of activity, taking digital asset trading off the table because that's not captured in MiCA, but other types of payment flows, certainly around cross-border payments in and out of Europe is, I think, one element where we're not quite sure where that's going to fall within the context of MiCA and the transaction caps. So that would be the only thing that I would suggest from a harmonization perspective that does have the potential to cause some friction when you look at kind of the global flow of value.
Very interesting, Tina. Let us get back to this in just a minute, and then also maybe move toward use cases and have a look at the entire system. But one step back. My understanding always was, for instance, we could ask ourselves as Europeans, if there is a US dollar-denominated stablecoin, why isn't there a European or an euro-denominated stablecoin? And what I learned, correct me if I'm wrong, one reason to this is the interest rate regime we've seen for the major part in the past. This has changed quite recently due to another crisis, which we don't gonna focus here today, but this is slightly shift. But then again, what, Tina, is your business model or your use case in coming to the EU and being the player issuing maybe the successful first major rollout of a European stablecoin?
Sure. So I think there's a couple of things within that. The first is that, Circle does identify that for the use cases to move from speculation to utility, there does need to be currency native digital currencies for those countries, right? So if we expect the payments applications to continue to grow, why would someone in Europe want to pay for something in a US denominated currency? There's going to be some FX slippage in there. And certainly from a business and an e-commerce perspective, there are businesses that do need to make that exchange, that do operate in two currencies. And so this provides an FX tool for those businesses and certainly for companies like MasterCard, who we partner with in various different jurisdictions on specific projects. So for cross-border payments or cross-border remittances, peer-to-peer remittances, it makes a lot of sense to have a European stablecoin. I do think that the US dollar stablecoin, because of the nature of the digital asset trading evolution of these tokens is primarily where this came from. However, I think that over time, we're going to start to see that localize, and obviously Circle wants to provide those services. Now, in looking at how we're structured and what our intention is, we've always been a regulation first business. So we don't undertake unregulated activity. And so there has been a delay in our ability to launch maybe the Euro stablecoin. We ended up launching that out of our US business because there wasn't a regulated path for us to do so in Europe. And now there is, and we find that very exciting, and it will allow us to kind of expand on those use cases. So some of it is putting the path in place for the industry to begin to innovate and develop those tools and services. And I think that, MiCA provides for that, and that's exceptional. And I think we'll start to see that change. But the prudential mindset around providing an asset that would be potentially used for, prolific payments use, it's entirely critical that that governance, fiduciary responsibility, the reserve backing, all of those elements are in place. And so I think that Circle felt confident that we were at a point that we could do that effectively and resiliently in Europe.
Jan, if you hear this outline, being regulation first, how do you perceive this current situation? Maybe in a broader context, not to put you in a certain place or angle, but if I have a look at the other initiatives we had going on in Europe, being at the instant payments regime we're currently discussing, which of course evokes the idea of EPI, the European Payments Initiative, that is not so European any longer, but there was a clear diction, I think, within or among political stakeholders that we need some counterweight against international players when it comes to payments. So having this regulation approach, similar, we have it, for instance, with DORA. Do you think this is the right way to go, or from maybe an ideological perspective, how do you perceive the current situation, Europe versus or together with international players? I think this would be very interesting for the audience.
Yeah, right. No, I mean, I think as we are all Europeans in a way, I think we would all be quite happy, and we are all quite happy when innovation, let's say, comes out of Europe, and when Europeans kind of set up companies, and when they basically grow and are successful in Europe and also internationally. I think that is clear and obvious. That having been said, I mean, I think the European Commission, we have a really good and strong tradition in encouraging, let's say, open financial markets. And yes, that means that, of course, European firms have opportunities abroad, but that, of course, also means that foreign companies have opportunities in Europe. And I think, honestly, Europe is, let's say, and remains one of the most open continents, I think, around the globe. And I think that's also our approach in financial services. Now, I mean, it is clear that in the financial sector, to preserve financial stability and protect our customers, and in certain instances also, let's say, monetary sovereignty, there are a couple of safeguards which need to be there. Again, this is not a European specialty. I think other jurisdictions have very similar concerns. If you talk about a stable coin, for example, which is backed by a reserve, and you have a redemption right that underpins the confidence of this system. Well, if the reserve is located in the Bahamas, to quote a recent prominent example, that confidence may not be, let's say, built on a very strong footing, because the insolvency proceedings in the Bahamas and internationally take so long that this is not really a reserve which is available. And I think that is one example, and there are others. I think you mentioned DORA, where we say, well, if you are a significant, let's say, data or cloud service provider, you need to also have a shop in Europe in a way to provide your services. Again, not to locate all your data in Europe, but it needs to be, I mean, supervisors need to be confident that they have a grip over you and can oversee you. Otherwise, at some point, they will indeed say, well, we don't want to have non-Europeans anymore. So in a way, it's precisely also this minimum kind of regulatory grip is precisely also there to comfort indeed and to address the absolutely essential and legitimate concerns which are there from the public policy perspective, and to avoid that they then basically spill over into let's say ring fencing and other kind of objectives. And so I think from our perspective, we've been having quite a good, let's say, trying to find, I think we've managed to find a quite good balance here, basically, to address the legitimate concerns in the financial sector while remaining indeed open and integrated in the EU. And I think Mika is also part of that effort. I think, Tina, you also mentioned a couple of, let's say, particular points, of course, on which we've been discussing, that there are certain, but I mean, I think ultimately they are all in a way tools and means to address what I think are quite legitimate also policy concerns, and in that sense probably are necessary and also proportionate to that. So, I mean, I think we have included some, and also we're adding some limits indeed for the use of let's say non-European denominated stablecoins in a wide manner for payment purposes. And I mean, again, I mean, I think there as well. I think we are in a situation where if in the US you had a euro-denominated stablecoin, which is used by everybody in the shop, in the corner shop, to buy their cigarettes or their beer, I think US monetary policymakers would also have a concern, and I think the same would be the case here. We are far from that with stablecoins today, and whether we ever get there is a matter of discussion. And so I don't think this is a very practical discussion that we have here, practical obstacles or limits. But I think indeed, if that were to be the case, then indeed, again, policymakers would not say, no, we don't want to have this non-EU operator here, but then the non-EU operator will need to issue a coin also denominated in euro, which Circle is doing. So in that sense, I think we are very much there on a similar line as well.
Yeah, Jan, thanks for this very placative example with the corner shop, which brings me, Dorothea, to you. In terms of use cases, in terms of mass adoption, I think there are a few steps in between from you as a global payment rail and payment service provider. What is your perception in terms of where are we currently standing at? Where do we see an uptake of stable coins? Where do you see potential in the future, maybe so to have an outlook for the next 10 minutes or so?
Yes. So as I said before, at the moment, the biggest uptake of stablecoins, we still see an investment environment. But having said that, we do see demand picking up also on the merchant side who are interested in using stablecoins as a means of payments as a means of payments, allowing the consumers to pay in stablecoins. This is the capacity to do so, at least on the payments networks, namely on Visa and MasterCard, is, let's say, limited at the moment. But this is a topic we very much looking into because we want in the future be able to enable stablecoins as well as CBDCs on our network. So given that we have been approached by our customers on both sides, the issuing side as well as the merchant side, to consider that at least. So we do see the potential. As I said, as of now, it's still very limited. It's probably restricted to the digital asset space, the investment space, and digital merchants. But going forward, there is the potential coming up from our side.
Okay, interesting. Tina, maybe a similar question to you. Adding to this, you mentioned a cooperative principle with existing intermediaries. We always talk a lot about disruptive potential of stablecoins. Before I'm going to go into interplay with CBDCs, cash and stuff like that. How do you see actually changing the entire ecosystem? Do you see more collaboration? Will you be maybe replacing certain players in the future ahead, or will it be wallet providers? What is your take on changing payment landscape?
So I think if you look at Circle and USDC through the lens of payments market infrastructure, it becomes really clear that our role is not to displace anyone. We offer a settlement asset that is on-chain, uses open source technology, which is constantly upgradable and is very transparent, and enables incredibly cost-effective and efficient, transparent ways to settle transactions. So we're a partner. We essentially put either the euro or the dollar into a digital capacity that it can move at the speed of the internet. That's essentially what we do. We're not creating monetary policy. We're not creating euros. We're not creating another type of token that has a value. And so what that enables you to do, today we made an announcement, I'll go ahead and pump our latest announcement, that Apple Pay is now available in the Circle account. So merchants that offer Apple Pay can now offer Apple Pay and settle with USDC into their Circle account. So that is just providing consumers with yet another option and providing merchants with another way to potentially accept settlement in an asset that might be faster, cheaper, more efficient for them. I think another way that we're looking at partnerships too, that really isn't our partnership. So a great example of this is the Stellar blockchain is working directly with MoneyGram on cross-border remittances. The settlement asset happens to be USDC. And so what it allows people to do is send USDC to any Stellar wallet, and that person can walk into a MoneyGram shop anywhere in the world and receive that remittance and cash out. And the cost of that is a fraction. So it's something like, and I might get these numbers a little bit wrong, but it's like 1.4% versus on average 5.6%. So, it's material and significant. And those are a couple examples of how people are using USDC.
It's interesting to hear. So if I may try to wrap it up, but correct me if I'm wrong, it's like on the one hand, creating more efficiency, but on the other hand, also using or maybe build upon existing players that are already trusted in the ecosystem and try to recreate or further develop our existing system for the better. Maybe Jan, to throw this back to you. I know this from other parts. This sounds like our ecosystem is getting ever more complex. Do you already have certain areas in focus, or the EU Commission has certain areas in focus we are not aware of thus far that may become center of attention that might be interesting to our panel here and to our viewers at home?
Well, look, I think, I mean, MiCA has really been is really an important piece, and now we have the legislation, the rules there. But I mean, the implementation of this will be a whole different story, and it will really change also the sector. But it will also be a big challenge for, I think, all the operators, even those who, as Tina said, indeed are really striving to, let's say, be part of this, or are already licensed, as others you'll have later on here on the panel. But still, it's going to be a big journey. So I think that is and remains in the crypto area for us really the biggest priority. And then going forward, indeed, I think we will look what further measures are going to be necessary. Of course, looking at recent developments at decentralized finance as well. But I would not underestimate, I think, the relevance of MiCA, the importance of that Europe has really a common approach here, which is supported by everybody and that we can implement now. And it's really important now to get this right also in the implementation. That's for me really the biggest priority.
Great point. I see some nodding. Maybe, Dorothea, another question for you before we run out of time, I'm afraid. So we heard a lot of potential changes in the ecosystem or thought of changes. What is that merchants, other players can do today? They may be a bit overwhelmed with all the innovation going on. What do you think are the key 1 or 2 challenges to get done as of today to be future-proof in the future in terms of payments in general?
It's a tricky question, but overall, I think, yes, the ecosystem is evolving very fast. I think in Europe especially, you need to get a head around regulation. They need to understand what their consumers want to pay with, because in the end, I think it's about consumer choice and enabling those consumer choice. So if I'm a merchant, I need to understand what my consumer wants to pay with, and we do see the potential, and we're working with Circle and other players in the market very closely to how to enable this choice. And I think that is really something we need to get our head around in terms of cooperation. So we also, as traditional financial services players, maybe need to be open for this innovation and enable those choices for the end consumer, so that they can transact in the means of payments they choose to do in a safe and compliant manner. And that, I think, is a challenge that we have to overcome at the moment, and to really understand how this ecosystem can benefit. It can be a benefit for all of us, because there are lots and lots of opportunities out there. We just need to make sure that we do it in a safe and compliant manner.
Thank you. I think it's also great that you put in the consumer, or put the consumer first again, as we had some, I think, a quite technical talk, and I think this is what it all boils down to at the end of the day. Making our final round, I have a specific consumer in mind, and I want you to just really shout out the answer that pops up in your mind first. So fast forward 10 years, think of your daughter's or your niece's piggy bank. What sort of payments would you use to provide them with some sort of allowance? Would it be CBDC stable coins, so like a wallet solution? Will it be a physical piggy bank, and will it be old school cash? Maybe Jan, starting with you, what would be your preference?
Not cash, but among the other ones, I really want to see how they develop. I mean, I think we may not see them all indeed getting their breakthrough in a way. That's one of the interesting parts of this innovation. I mean, if you had this discussion here 2-3 years ago, you would have put your bet on very different players than you would have put them now. So I don't want to put my bet on any of them, but it would certainly be digital.
Very diplomatic answer. I take that. But as a positive sign toward digitization, Tina, what would be your choice?
Well, my nephew just got married, and I sent him his wedding present in USDC.
So already in the present happening. Great to hear that. Dorothea, how about you?
definitely digital version. And I have to say, if we have a European denominated stablecoin, I probably would be very much looking forward to using that as well.
Very interesting. To the three of you, thanks so much for taking your time, giving us some insights into regulatory issues, what is currently going on within the industry. I had a lot of fun, and I hope to engage in this or a similar setting anytime soon. If you have some time, join us for the remainder of today's session. And with that said, thanks you. Have a great afternoon. And yeah, that said, we're gonna move from one very interesting session to another very interesting session. Now for the first part, so to say, of the Digital Euro Summit, we have dealt with quite extensively different forms of money, CBDCs, stable coins. We heard some remarks of Burkhard Balz and his take of the German central bank on CBDCs. A lot of dynamics, and I'm very happy to take those issues further in the next coming months and years. But now we want to move to another aspect of the Digital Euro Summit, which is more concerned with crypto assets, crypto exchanges, DeFi in general. And to kick it off, I'm very happy to have probably one of the best equipped persons across Europe here with me on the digital stage. Eric Demuth, CEO and co-founder of Bitpanda, probably the largest and most important European crypto exchange. I think you don't need any further introduction. Kicking off, I want to just cut to the chase. I mean, I think the entire industry, our friends from the crypto industry, also here at Bitkom, we have been very shocked from what has happened the last couple of days with FTX, Sam Bankman-Fried. Eric, to kick off, you've been around this business for quite a while now, helped to establish the reputation. On a personal level, how are you feeling? You also did some quite, you've been vocal about it on LinkedIn, for instance, and on Twitter. How are you doing today and look at the industry as of now?
Hi. So, hello, first of all. To jump directly in, I'm personally fine. Bitpanda is completely fine because we have always done the opposite. So we have always done the, let's say, conservative approach. I was just surprised that it hit FTX first and not Crypto.com. But apart from that, I'm not too shocked. We've seen this several times in completely different variety of let's say situations. What I mean with this is, in all these years, Bitpanda exists now for 8 years. We're in the industry for a bit longer, but every few years we see like a downturn, right? So like a crypto winter, however you want to call it. So for example, after the ICO craze, a lot of bandwagon people that originally come maybe from the multi-layer marketing scheme or something, or should be influencers or whatever, that shouldn't be in there, and they're certainly not innovators. They were washed out after the hype. And we see this on a regular basis every few years. And every time the industry got bigger, so the people that shouldn't be in there, that have been washed out, are just getting bigger. So now it's getting more attention. But this is nothing new, what we have seen. And every time afterwards, the industry consolidates and gets more mature. So, for example, if you look at what Coinbase does in the US or Bitpanda does in Europe, this is the completely opposite way. Both companies, we're playing by the rules and try to establish something big and build a digital version for the future. While the Crypto.coms and FTX are, I'd like to use the analogy of, let's say, they're using steroids to pump up, to push themselves up, right? Avoiding regulation at all cost, not playing by any rules, therefore high speed, get bigger. But there's one thing they both have in common. They do not have any kind of reputation because they're trying to avoid our regulation. They avoid playing by the rules. And therefore, they take money and buy sponsorships or celebrities and get reputation to appear trustworthy. But there's just a handful of companies in the world that actually play by the rules and can actually be trusted, that for example, customer funds are completely separated. It doesn't matter if the companies mess up or something happens, the customer funds are always there, always 100% there. So, and that's a huge, huge difference. So, and what we currently see is that these, let's say, these companies that are built on steroids, they are either getting, let's say, disqualified by some judges, some regulation, or they simply die on a heart attack. And this is currently what's happening.
Eric, I agree, and I enjoy the positive attitude also toward the future, and reminding of us that it's always been an up and down. I'd argue it's a different scale. We currently see a different scale of impact, and just not fast forward, but rewind a couple of weeks ago. I mean, Sam Bankman-Fried was on Forbes cover page. So what I fear is that there isn't enough differentiation between let's say legit players and not so legit players. Don't want to put anyone into different corners. Given increasing adoption, I mean, you've been very influential in increasing adoption toward crypto assets. What is it that you can do today, or players, you mentioned Coinbase, can do today to rebuild trust, reputation? Because what I think many of us are afraid right now is that we have like a similar backlash like we've seen it with Wirecard a couple of years back. So fintech's bad, so we did quite a journey to get back out of that box, out of that corner. What is your view on this?
So at the beginning, of course, media in general say like the crypto industry. And then always what will happen over the next days, and it's already starting to happen, and over the next weeks, you see the differentiation more, and that's pretty normal. So the good news here for us, and also for Coinbase in the US, is that we do not have to come up with anything and try to assure somebody. Most of our customers that have onboarded in Coinbase or in Bitpanda or some other companies maybe that are doing similar, they have come because of we're like local, we are regulated, we play by the rules, and we don't, some things we cannot offer because you see what's happening, right? And therefore I'm not too worried. So actually, in the past days, since the FTX thing happened, we actually have a slight inflow. Of course, we have outflow from customers, but so actually we're one of the few companies that are currently, I would say, profiting. That say like, okay, it was a lot of fun on these other exchanges, but now maybe we have to get to a more, let's say, conservative approach. So we already see that this is happening, and the whole industry. We're built here for the long run, and therefore I'm not worried. On the short term, you have to do a lot of explanation, especially to media, to journalists, but that's pretty normal, and happy to do so because we can always back it up what we're saying.
Very interesting, and very interesting that you added use in actually, from your point of view, slide or an uptake in your numbers. Maybe to move on a bit from the current challenges. I mean, if you compare the field of crypto assets to like 1 or 1.5 years ago, we are at a completely different state. Like if you want to say from gold rush to reluctance. If you compare it, you said you're in it for the long run, but what has it meant for you? It's been quite a difficult year. How did you manage to move on and ensure to properly grow, sustainably grow also in the future?
Yeah, so to be transparent, I said before, we've seen this several times, right? Let's call it crypto winters and summers.
Yeah.
It's always the same. The only thing that changes afterwards is that the next cycle is bigger than the one before in absolute numbers. In relative, let's say in relative numbers, it's not. But of course, in absolute numbers, it is. And that also means when things get bigger, you get slower. You have more people. You cannot be like super agile and just make one change within a week and then it's effective. our companies now with like over 100, like a few hundred people or over 1,000 people in a company is of course slower when you make changes, significant changes that will take months to become effective. These are the things that changed. But the other things that we call it now the building phase, this is something that we have seen before. And we're preparing now for the future. And this is why you act more conservative in the past. So because we have seen this several times, you need to have a good cash reserve because you don't know how long the whole, let's say, financial markets in the world are down, until how long, let's say, there's a trust issue with people investing in general, either stocks or whatever it is. Yeah.
What do you think? I want to dig a bit deeper on things like reputation and also like working with the regulator and how to dig a bit deeper on this. But maybe for the few consumers in front of the screens, what can we do? I'm just interested in, you know, partaking in the field of crypto assets. What is the homeworks we have to get right to not end up with the wrong players in the end of the day, right?
So common sense is, of course, the first thing, but it's not about just crypto. This is something in general. If something sounds too good to be true, it pretty much always is. So greed is the biggest problem when you make the investment decisions. Long-term investment decisions are always, of course, the best ones, even if that means on a psychological basis you're missing out on some short-term gains. But in the end, it pays off. So this whole FOMO thing, this is something we need to learn, that this is not an indicator for your decision. And therefore, research, look where the people are. Is there actually an office, and so on. So like the classic stuff, how you would. So I in an interview a week ago, I said, you know, if you take your paycheck, your salary, where does it go to? Does it go to a bank in Bahamas or in Taiwan? Or does it go to, let's say, Deutsche Bank or whatever, right? And the answer is very clear. You choose your bank like in a very conservative way because this is your asset, this is your money. So what's the difference between your crypto assets or your stocks or something? This is the same thing. It has a value. Either it's stock, it's crypto, or it's cash. You need to treat it in a similar way. And this is something, because the industry is quite young, this hasn't been, this hasn't been, let's say, the common sense so far, but it will be.
Very interesting, and I'm afraid I have to admit, also having fallen victim to FOMO, fear of missing out. Showing some quite bad timing and investing into Solana, but that's an entire different subject. To
be fair, I also have Solana, right? But it's just a matter of how diverse are you? If you put everything in one basket, it doesn't matter what basket it is a bad idea. And the more volatile, the more speculative things are, the smaller the percentage of let's say your gamble money, or however you want to call it, it should be a smaller amount, pretty much. So and the more, let's say, conservative, let's say if it's more like an S&P 500 ETF or MSCI World or something, like when we compare it to stocks, there you can probably have a bigger amount of your portfolio in there compared to, let's say, penny stocks or a stock that is having a long shot on I don't know, some technology that isn't even there yet.
Totally agree. Eric, focusing just for a second on regulation. I don't know if I had the opportunity to briefly listen into the panel earlier, where we quickly touched upon MiCA and its potential to like actually enabling or building this trust. So, you know, separating between legit and non-legit players. What is your view in terms of having a solid regulation in place, and what is your approach toward working with the supervision and the regulator in that regard?
I mean, we have the most license in that regard, and that is pretty much our core competency and our biggest USP in Europe. Because also, when we talk about the crypto regulation, I think this is what you're referring to, we do not talk about Europe in the current stage. Of course, in the future we can with MiCA. MiCA is pretty much like MiFID II, transferred to crypto. But currently it is 27 different countries, different regulators, different laws, different approaches. Nothing is harmonized. And that's also the biggest problem in Europe. You can have, like, for example, a very tough, strong regulation, especially now after the FTX thing or crypto.com or whatever. But there's one big difference in Europe that Europe hasn't understood yet. You can have the biggest regulation ever. It will not be efficient if you continue to let people outside be active in your market, get millions or tens of millions of customers in Europe, and they're playing without a license, playing without the rules. Because the national regulators do not feel responsible to do something against it. Why do you think there is FTX US or anything like this? Because they wouldn't dare to, let's say, offer their services to Americans without a license there, because then you can just count the days until you're in jail. And in Europe, because there's nothing harmonized there, and the regulators are just taking care nationally, or let's say regionally, they can do whatever they want. And this is a huge problem. So you can have good regulation, but you have to make sure that you have a similar system like in the US, that people from the outside that try to abuse your system, or that currently are able to abuse your system, will not in the future, because then your regulation is just for people inside this inside Europe, inside companies for companies like us, and then we have to compete with people that are not playing by the rules and trying to overtake with what I said before with steroids.
I mean, I totally agree, and I think it's always difficult in that regard. I see it somewhat mirrored what you just said within Meeker, but of course those things take time. So are you confident moving forward? I don't know, 2 to 3 years ahead. Do you think it's going to be a better place in terms of crypto asset providers, in terms of crypto exchanges, because we have
absolutely.
Okay.
Absolutely. I have no doubt on that. What I'm just super sad of is that it always needs some explosion until something happens and there is protection of the markets. And this is a European problem, that it is not harmonized enough. And as I said, the US is doing this very, very well. There is a lot of fear from people trying to abuse system, but in Europe, it's like, what's the worst thing that can happen, you know?
Yeah.
So, yeah.
Totally agree. Would be interesting to dive a bit deeper, but I want to open up for the last couple of minutes another subject you just briefly alluded to. You're not European yet, but I think all of our viewers at home are pretty much interested. What are your plans for the future in terms of expanding? What are your plans? Bitkom is a German-based digital association with Germany. I mean, we read the news with N26. You were working, I would put it, crypto as a service provider, acting for them. What's the deal with that? Are you gonna enable other traditional or also fintech players offering crypto? Yes. Will you expand as well? What's to expect, so to say, for the next couple of months and years?
So it's not really crypto. I mean, of course, for N26 it's crypto, but it's not crypto as a service we're offering. We're also offering stock system, metals, commodities, and all these things. So we're growing. We're coming from the crypto space, but we're in the transition of becoming an investment platform for everybody. So, and here the thing is that we have always built our tech, the tech ourselves, and we see our own retail app as the biggest customer of our own tech stack. And then also the licenses we have ourselves. And we said, like, okay, we can leverage on that and then offer this infrastructure thing, because especially for crypto, this is pretty much impossible to build for themselves. So if now a fintech tries to build what a proper crypto company has, they would always be like years behind. So if they would start now, then they can maybe offer something next year that was up to date 2017. So we saw there's a huge demand. So we've started with Lydia. They have over 5 million customers in France. We have Plum now. We have several customers, B2B customers in Italy. More are coming, more are onboarding right now. It takes some time, especially the more traditional banks take more time to onboard. But you will see a lot of in the following month and in the next year, you will see a lot more player. Especially in Europe, you're using our services, and that's very modular. So it's if you just want to take this part, you don't have to do pretty much like a copy of Bitpanda. You can just, it's one API, and you can modularly get services whatever you want to your system. So this is something we are investing heavily in. So more infrastructure, more B2B services, or B2B2C, or however you want to call it. And then, of course, we're investing quite a lot in building currently a lot, and also getting more licenses employed for our stocks offering to get this in place. So to really have the whole variety of crypto stocks, commodities, whatever you want. So you just need one platform, and it's super easy to understand.
So moving toward platform, I mean, we at Bitkom love to hear this, because we are a proponent of, thinking that actually with further innovation, we're gonna develop into this platform type of fintech ecosystem. It's like plug and play, to put it simply, and working together. Maybe one question: we have a lot of bankers also in the audience, and I know if you also followed media, the sentiment about entering crypto was quite different a couple of months ago than it is today. What would you say to those officials currently deciding whether to not or to move into the field of crypto, maybe with the help of you as an enabler? What would be your suggestion to do at this stage?
I mean, my answer is pretty foreseen, right? I mean, this is pretty clear. The thing is, we have seen these times, what I said before, twice, several times. Just because now it's a down market, doesn't mean it will not come back. Actually, it's definitely not the case. So crypto has already become an asset class that has been established and will never vanish. It will never go away. And you see with more regulation that it also becomes more established in that regard. So some of the players will die in this area, and the market will become, or the industry will become more mature. Some coins will vanish, and some new will come up. It's the same like with the stock market. But this is definitely something we will always have from now on, and things are getting more digitized anyways. So, and also our system is set up in a way that is super easy to implement. If you do it properly, you don't need more than 3 months to set it up, and then you can just try it out. So we see a lot of demand, even in times like these, because they know, okay, it takes some time for them to go through the process internally, to get it approved, and then also to implement it. And by the time then they are ready, because you don't want to start when there's already like the big craze around, and then you're missing it out. And then the market has become even bigger than it was before, cycle-wise.
Get it. So maybe to try to wrap up, so what we're going to see in the future is more consolidation, more regulation, so more trust and security put in place. Maybe as an outlook, I'd be interested in your view on decentralized finance as well. If we think back, the initial idea maybe of Bitcoin was actually to get rid of the intermediaries. How do you think how will DeFi interact in the future with exchanges like you are, with other centralized players? Will we see DeFi in the future? Is there a need for DeFi? What is your view on this general development as such?
I mean, there's definitely a space for DeFi. There's no doubt. I would just say that it's more a specialized product market. I wouldn't say niche, it's, let's say, a big niche, but it's not for the customer segment we're serving. It's not for the mainstream market. It's people in general are afraid of handling their own money, doing, let's say, one click in the wrong space, or let's say send it somewhere and nobody can recover it. This is very scary for most people. Can you do it? Can I do it? Yes. Are we the absolute mass market? Definitely not. So you will have both systems, but the centralized way, and this is why also the bank system and the retail banking so on exist and will never vanish in that regard, is that you need to have systems like this and make it super convenient, but also secure for the absolute mass market. But I don't think that these things are, let's say, competing against each other.
Interesting take, Eric, and I think it's a great bridge for what's to come. Thanks for taking your time. Next time I hope we can do this in person in a similar setup. Thanks for taking your time today. Enjoy the afternoon. Stick around if you want to. And yeah, with that said, and this introduction, I'd say, to the fields of crypto assets, touched upon a bit about Mika. I'm happy now to welcome back my friend and colleague Benedict on the stage, who's gonna lead us for the grand finale of today. Already seeing familiar faces in the camera already. Benedict, I'll leave it up to you. Thanks for doing this together today.
Thank you, Kevin. Well, what a ride it has been so far. We have already talked about some of the issues, among others, about FTX. But now we want to take a look at how regulation can mitigate risks in the crypto sector. So more precisely, we will be talking about Mika, or if Mika is or is not shaping the future of worldwide crypto regulation. And for this panel, I am happy to welcome Mr. Stefan Berger, member of the European Parliament. He is a member of the Committee on Economic and Monetary Affairs and is also the EU Parliament's rapporteur for the Mika regulation. So in this regard, he has been fundamental to the process of creating Mika, which we will be talking about now. Welcome, Mr. Berger.
Hello, welcome.
I'm also delighted to be joined by Patrick Hansen, who is Director of EU Strategy and Policy at Circle, which is one of the leading digital financial services providers building a treasury and payments infrastructure for the internet. Prior to that, Patrick worked at the crypto wallet startup Unstoppable Finance and was my predecessor here at Bitkom. And he is also a vocal voice on Twitter where he comments and breaks down EU policy. Welcome, Patrick.
Thanks, Benedict. Super happy to be part of this event now from the other side. Last year, I was still standing where you stand right now, so really glad to be here today.
So welcome back. And now I've seen we're also joined by our third panelist. Welcome Carola Radke, who is a partner at WIPOC, where she advises domestic and foreign banks, financial services institutions, and capital management companies on regulatory issues, as well as on a broad range of investment products. Welcome, Carola.
Hi, everybody. Great to be here. Great panel.
Well, now that we're all together, before we get into talking about all the necessary topics in the crypto sector, let's start the panel with a general question. So I would like to know, in your opinion, what is the biggest benefit of Mika, or what is the biggest benefit we will see of Mika? So maybe, Carola, we start with you, and then Mr. Berger, and then Patrick.
Okay, perfect. Yeah, I think coming from Germany, we had a lot of discussions with clients, what is the biggest benefit? And of course, we do have clients that decided to go for a BaFin license already, which is a bit similar to later on the Mika license, or the license under the Mika regime. And the topic is reliability. So for a lot of players in the market, reliability expectation of what is coming up is the biggest point. And therefore, I would say knowing what is coming up, knowing what is regulated, how it is regulated. I think we have a very prominent example currently with FTX in the market. So I don't want to misuse this currently, but I think it shows that it makes sense to at least regulate to a certain feasible extent such kind of players, because in the end they are providing certain financial services, whether it's on the asset class crypto assets or whether it's on the financial services Mika financial instrument side. there is a need for reliability in the market and a certain feasible type of supervision of these entities.
Thank you, Carola. Mr. Berger, what do you think is the biggest benefit of MiCA?
Yes, okay. Hello, everybody. So when I started with my work on MiCA now years ago, the whole cryptosphere was not regulated. And things like NFTs or whatever were not discussed. And during the last years, we saw a lot of developments. And it was mentioned, we saw the development and we saw the thing about FTX, and we saw good things and bad things. But for me is one of the most important issues of this big regulation, that a lot of people now have the opportunity to take the big step into the digital asset ecosystem. And if someone wants to do this step, the person needs regulatory clarity. And this will build trust. The rules of MiCA will build trust. And the trust is the main thing that ensures a very good perspective for the whole crypto and the blockchain sphere. So the most important thing is building the trust.
Thank you, Mr. Berger. Patrick, for you, the biggest benefit of MiCA?
I would cite three main benefits that I see with MiCA, and most of those points have already been touched on by Stefan and Carola. So the first one, I think, is regulatory harmonization throughout the European Union, and that is deeply necessary if we want European companies, startups, to scale as fast as, for example, their American or their Chinese counterparts. We need one harmonized market in the EU, and MiCA achieves that, at least for the crypto asset space. The second big benefit is the one of regulatory clarity that Stefan Berger mentioned. I think many companies in this space were even wondering, or partly are still wondering, what do we have to comply with in order to offer those kinds of products and services, and MiCA offers that clarity. And then the third one is consumer protection, and that is also one of the main outspoken goals of MiCA. And I think after last week, I think most of us would agree with the importance of that goal and how regulation can at least partly build towards that goal. So yeah, I would say harmonization, clarity, and consumer protection are the main benefits.
Thank you, Patrick. So I think, yeah, we've heard and started now with some of the benefits of MiCA. And Mr. Berger, I saw on Twitter that you compared the FTX insolvency to the bankruptcy of Lehman Brothers. So what I would like to know is, do you see this as the important step where you say, like, MiCA has been so important and this can't happen in Europe? And maybe why was and is it so important to regulate the crypto space, in your opinion?
Okay, so if you look at the FTX case, and you see that in the last 3 years, FTX reached a valuation of 32 billion and had billions of assets, then you can see that FTX reached a huge volume and was not regulated. And then things happened, and nobody really did understand and controlled and supervised the FTX crypto exchange. And in my opinion, if we had the rules of MiCA, and MiCA is in force 18 months after the last vote. So I think in 2025. For 2024. So for me, it is clear that when you have rules, it comes to a different behavior. Under a MiCA regulation, we would have internal control mechanisms. We would have a segregation of assets of clients and assets of funds. We would have governance boards and not a dependence on only one person. If FTX had a MiCA regulation, the way to the present day would be complete different way. So for me, it's obvious that rules, and the MiCA rules, are the bulwark against developments, which leads in the end to this Lehman moment, and FTX was a Lehman moment for the crypto world. And it always starts at the beginning, and in the beginning there were no rules on the Bahamas, of course, and if we had the rules, then the development were different. And this is what I'm saying. The steps of the development and things happened in the crypto exchange FTX would not happen under a MiCA regulation. This is my opinion.
Thank you. So you're saying that MiCA, if adopted on a worldwide scale, would have prevented the FTX collapse.
Yep.
Yeah, Carola, what do you think? Do you think that MiCA can really be the beacon of hope for worldwide crypto regulation? I cannot hear you at the moment. I'm not sure if it's only me.
No, sorry, it's on me. I was on mute, sorry. So I think, as always, it is you cannot totally prevent these kind of things. We had other scandals in Germany. Just need to mention Wirecard. So you cannot totally avoid it, of course. But I absolutely agree that, of course, and I always want to stress a feasible regulation that really understands how this asset class works and to kind of differentiate the tech part from the really regulatory part. With a feasible regulation, you can avoid a lot of these issues coming up with FTX. I think everybody agrees on that side. Whenever we have, and we just talk about centralized player, I think another interesting topic will be DeFi, which is not really touched. Where does it start? Where does it end? But when it comes to really a centralized unit, and FTX, of course, was a centralized player in the market, I think I agree with what Stefan Berger has said, that you can at least reduce significantly the risk, exactly due to these points already mentioned. You have core capital requirements, you have governance requirements you need to observe, and you have a lot of these add-on topics that BaFin and all the European regulators, and also, of course, the US and other regulators request from players in the market. And therefore, insolvency risks, which is another topic, interesting topic, actually currently, I think is something we need to touch on in many jurisdictions, because it's not part of MiCA yet, and it's an important topic. Not harmonized yet, but nevertheless, I think it could reduce risk significantly, yes.
And now handing it over to you, Patrick. You have also closely monitored the development of MiCA. And what do you think? Can it be a role model? Do you think there are any maybe loopholes where we still need to twist and reevaluate how MiCA can become that bulwark against problems like we have seen with FTX?
Yeah, so I think it's obviously a very complex and nuanced discussion, but I agree with Stefan and Carola insofar as MiCA introduces a lot of requirements with regards to the segregation of funds and bankruptcy proof, segregated accounts. It introduces capital buffers, it introduces governance management systems, enterprise risk provisions, etc. That definitely were violated by FTX, and in that sense, MiCA can help prevent those cases, at least in the European Union, and for the companies that want to comply with MiCA. I think apart from that, there will always be frauds and scams and companies choosing not to comply with some regulations, but instead choosing to go to some kind of offshore location, to go someplace in the world that is not regulated. In that sense, obviously, even once MiCA is in place, it won't prevent all kinds of companies choosing to go the offshore way. But one important aspect, I think, is related to the regulatory clarity that we discussed earlier. I think one reason why FTX could become so powerful in such a short amount of time is that essentially those companies, especially in the US, that were regulatory first from the start, like the company I work for, Circle, or even Coinbase, they didn't even have the clarity to provide services and products that could be that could have gained some market share from FTX, for example. So in that sense, indirectly, I think that regulatory clarity, and MiCA goes a long way in that direction, can help businesses be more competitive, to gain more market share from those players that choose to go, the opaque and offshore way. So that indirect connection, I think, is very, very important, and that's why it's so key that in the EU, but also in the US and globally, we get clear-cut rules on how to provide those services in the market. And once we have that, I think most of the individuals, of the customers that in previous years maybe went to those offshore players, decide to choose for the more regulated and compliance first companies in the regulated space.
Yes, I think it's really interesting, and I expected that to hear from all of you that it is so important to have this regulation in place. Also, we've heard it before from Eric from Bitpanda, that there are always these ups and downs, whether you call it a crypto winter or however you want to call it. We're certainly in one at the moment. So I would like to step back a little bit from MiCA and just look at the general role that crypto assets are playing now and how it will develop in the future, and how you see that with regards to MiCA. Is it something where you say, like, in 5 to 10 years we will still have MiCA, maybe tweaked a little bit, adapted, evaluated, or do you think that the whole crypto space is moving so quickly that we will see another innovation cycle and need a whole new legislative body for these new developments, however they might look?
Yeah, happy to kick this off. I think obviously if we look into the past and into the last decade and the 12 years of Bitcoin's existence now, obviously most of the market activity has been dominated by speculative activity with regards to trading, with regards to investing, etc. And I think that one thing that we will see going forward is that, and that's something that we at Circle are trying to build for, is that the market moves towards a phase of crypto utility, where basically clients, people, individuals, companies use those technological infrastructure, for example, blockchains or crypto tokens, in order to build products and services that improve the user experience for these customers. And we, at least at Circle, we see some data that might be the case, and that is already currently underway. For example, the amount of USDC that is locked in purely crypto asset exchanges is going down, relatively speaking. We see a lot of small holders of USDC out there. So 75% of USDC holders hold less than $100. And that for us are first signs that the market is really moving towards that utility phase. And stable coins, in my opinion, are a key innovation that will enable a lot of payments use cases, cross-border payments, but also B2B payments or merchant payments. So hopefully we will see a lot more of that. But yeah, beyond that more general comment that we will hopefully move towards the utility phase, it's obviously impossible to to predict how the market will look like in 10 years. I wouldn't want to risk that false prediction here in public.
Not wanting to make any false predictions, but I see Mr. Berger nodding his head. So, Mr. Berger, what do you say?
Yeah, maybe I can add something. When we ordered the Commission to present a report on the application of MiCA 48 months after entry into force. In 4 years, we have a report, and we see where if MiCA, if we need new legislation or not. And let me say another thing. When we started with MiCA, the thing NFT, non-fungible token, was not named in the first proposal. But of course, we all saw the developments in the meta, and we saw the thing metaverse. Yeah, I know that metaverse is not where it should be, but we all saw the things, and now in MiCA we have NFTs, but NFTs are not regulated. CASPs, the crypto asset service providers, are regulated, but not NFTs. And in 18 months, the Commission will make a regulation for NFTs. And I think it's necessary just to make sure that you have on the NFT side a regulatory clarity. And this shows that it's very hard to predict where the whole sector is in 10 years. When I started, everybody told me about the tokenization. I do not see really the tokenization. I see NFT things, I see some tokens, I see some utility tokens, but I do not see the asset reference tokens, the gold tokens I will buy and have in my wallet. Yeah? We are now at the point zero in the whole. It's a crypto moment zero for me now, and we will see in the next 4 or 5 years where the development will go. And for me, it is important that it all depends on the technological development. I was in the USA and I saw that a lot of American companies are investing in the metaverses. The metaverse NFTs, everybody knows here in this discussion that NFTs are necessary in the metaverses. For me, it's very hard because no European company is investing. It's all about Microsoft, Meta, Roblox, Adobe. A lot of companies, all from Chinese side, American side. And I think the investments in the technological investments, they will give the direction where the crypto market will develop.
Carola, you want to add?
In addition to that, so from when I see what clients request, in addition to what was already said, I think they will stay crypto assets. I think this is for sure. Will they be regulated differently? I think everybody knows that MiCA 2 is already kind of mentioned many times. So it already shows and indicates that it's an ongoing process. So I think we will see new legislations, but I think MiCA is a feasible starting point, and then we take it from there. Where do I see use cases? And I see these use cases, and I do see some gold tokens, other asset reference tokens. I think we do start seeing them now, and the first use cases are coming up. And when it comes to collaterals, for example, what has never been used before by our traditional players. So I talk about banks, financial services institutions, having big art collections. They want to tokenize these art collections in order to use this asset class, which was not fungible, which was not made for being used as a collateral, which this kind of tokenization, it is an asset reference token because in the end there is a real world asset behind. So I absolutely see your point, Stefan, that it is of course not a native coin like the Bitcoin, so it has a real world asset behind, but there are other opportunities now. So tokenized real estate, tokenized art, and other not really movable fungible assets can be used now for different purposes, and they even have balance sheet effects, so that people think about how can we use them for certain topics. And therefore, I think we will see more of them because traditional players start exploring the merits of these kind of tokenized assets. What is the merit? You don't need to move the piece of art, you don't need to move your real estate, but you can use certain types of these real world assets as collateral, as I said before. So the other point where I see the NFT space, of course, but this was already mentioned for all these gaming, metaverse, whatever communities, of course, this is totally different type of asset class, which has nothing to do with these real world assets I have described before. But of course, there are a lot of use cases. But as Stefan mentioned before, I also see them more outside of Europe, while I see this asset reference tokens also as an important player, upcoming player. We are not there yet, but for the European market.
So, yeah, there is this talk where we are quite far ahead in the future, tokenization of many assets, the metaverse, NFTs. We will come to NFTs in a minute, but I would like to focus on the more immediate effects now. So looking at MiCA as the European overarching framework for crypto asset and crypto asset service providers, how will MiCA affect Germany? Will it be net positive, net negative? What are the benefits? What are the possible side effects that we are looking at from a German perspective?
If you want me to pick it up, I have a clear picture at that point. So depending, so net positive, but but I'm a bit reluctant, as you notice. Why? So from a lawyer's perspective, actually, everybody thought, great, Germany had already this regulation in place. So when it comes to crypto trading platforms, when it comes to crypto custodians, German, as everybody knows here, probably implemented AMD5 differently. So it's not just a registration under money law implications. It's really BaFin license. So it's licensed exactly in the same way as normal investment firms. So there is the same set of rules. So a bit what we discussed at the starting point of our session. And therefore, a lot of players actually came to Germany because they wanted to have the regulation for all the reasons, again, set out at the beginning of our discussions, in order to open up for institutional players. Institutional players do need this reliability, trust, everything what was touched here. There are consumers behind sometimes, so all points apply here. A bit why I'm hesitant is because for the German market participants, it's interesting to see what's happening on the European level now. It's not 100% clear yet whether the other countries that have only registrations in place, and sometimes there are kind of really light registrations, do these companies get in a grandfather kind of scheme that makes it easy for them to also hop on the same level as the German entities? Because the German companies thought they have this first mover advantage because they have a really tough license, they have a tough regulator in place. So this is now the point, do they have this advantage, or will they be from these other European countries the downside? And then there are some different topics, but this is just more our anti-money laundering issues, video ident and other topics that makes it a bit difficult for German players, but this is out of the scope of this session, but a very important point, arbitrage in this money laundering topic.
Mr. Berger, Patrick.
No, I was just saying I totally agree with Carola. I think that the opportunity to potentially fast track those already existing German licenses, that's the big benefit. And the risk is obviously regulatory arbitrage. So if we end up in a scenario where no one is seeking the German authorizations anymore because other countries offer more lightweight licensing or registration procedures, that would obviously be bad for Germany. And so I think the EU, and that's already also a call for EU policymakers and regulators to monitor that closely, because we have seen other regimes in Europe, like the e-money directive or other regimes where national regulators had more leeway in transposing those into national law. And we see quite clearly with regards to the distribution of those licenses now in Europe, how regulatory arbitrage is always a topic to monitor and to follow closely.
Mr. Berger, are those things that you're already keeping a close eye on, also from the European perspective?
Yeah. This discussion is, you can compare it to discussions. We have different assets. But let me add another point. I had a lot of talks and discussions with the German banking sector. I know that the Bitcoin started anti-systematic against banks, against the central bank. I know it, everything. But now if we have the MiCA regulation, more and more parts of the classical financial sector will come into this. I talked to the Westfälischen Sparkassen- und Giroverband, and they now will make their own wallet and combine it with wallets and a bank account. I know that is the logic of the bank account and the logic of the wallet, and these are two different worlds. But when MiCA is in force, we will see that things are combined. And in Germany, we have a lot of smaller banks. For me, I think I like the German banking situation. It's better than in America or everywhere. And so what I see is that we will see a step-by-step integration of the old anti-systematic cryptosphere into the classical financial sector. This is one thing I want to add.
So from this point onwards, so the benefits or zero net positive for the MiCA, also for Germany, but some issues that remain, regulatory arbitrage is a point we need to worry about, at least a little bit. But another point I wanted to ask, and directing this question at you, Carola, because you're advising clients, and Patrick, you have also mentioned before the whole issue of compliance with the MiCA. I think this is a very interesting topic, and I would like to know what advantages right now the big companies have when it comes to complying with MiCA, and what can the smaller companies and the startups do to be compliant? Is there a systematic problem with this, or do you think that everybody will be able to comply with this equally and equally fast?
I think the answer has to be no. It's difficult for the smaller ones, as always. So if you're a bit more gray-haired, as I am, not gray-haired, but nevertheless a bit longer in the financial services sector, it's a bit what happened in the financial services sector with MiFID I and MiFID II in particular later on, which were European regulations kind of, with the effect of a lot of consolidation in that sector, meaning the bigger companies survived and the very small ones, the smaller ones sometimes, yes, but the small ones, no, because it is a lot of manpower you need. It's a lot of organizational setup you need. So this, to be honest, cannot be covered by just 2 to 4 FTEs. So there is, in order to fulfill all the regulatory requirements, you need a decent setup, at least the minimum setup of more than that amount of people. You need an organizational setup, which cannot be done on your own. So you normally need some big 4 players assisting you to set up really good system that can be audited later on, because you run through yearly annual audits later on. So the entire setup means, of course, it's a advantage for bigger companies. Mid-sized companies can handle it, a lot of burden, but can handle it. For the very small one, I predict that we will see a market consolidation. So either they consolidate or they probably won't survive, to be honest.
So maybe, Patrick, from your experience, because I think that stablecoins are one of the most tightly regulated crypto assets in the MiCA. How hard or easy is it for you at Circle to comply with all the regulations and the MiCA in general?
Yeah, indeed, stablecoins are already, I think, quite obviously, even if you look at the length of the MiCA text dedicated to stablecoins called asset reference tokens and e-money tokens, they're quite in the focus of policymakers here. Unfortunately, in my personal opinion, the Libra project left quite a long-standing mark here on EU policymakers, and basically led to, as you mentioned, Benedict, onerous requirements where, at least in some regards, I would have loved to see more openness towards those stablecoin innovations that, in my opinion, can be a great benefit for Europe and also the euro as a currency. So yeah, Circle, we as a company, as Benedict, you know, we have launched a euro-denominated stablecoin called Eurocoin in June. And it is our outspoken goal to onshore that stablecoin and to be compliant with all those MiCA requirements. So we are, we're deeply considering everything we need at the moment. We see some obstacles that we have to overcome, but generally speaking, I'm confident. But as Carola mentioned, these are efforts that are obviously easier to address by large companies compared to smaller companies. So I'm curious to see also how that will affect the stablecoin market in the future.
Thank you, Patrick. Mr. Berger, anything you want to add to this discussion?
Of course, if you have a bigger company, for them it's much more easier than for a smaller company. We have certain kinds of tokens. We have significant tokens and non-significant tokens. And if you have, for example, a small token which is not significant, you do not have so much to do as you have to do if you have a significant token. So let's see what's coming up. I know this is a problem, and I hope that we can solve the problems. We will see in the next time how it will goes in the reality. But in the end, it's all about assets and it's all about trust. And companies have money from people, not money from me, money from my mother. And so I think the work has to be done from everybody.
So, Mr. Berger, you've also touched upon the topic earlier during our discussion of NFTs. And I think this has been a topic where you said it's not all regulated yet, but the whole question, and I know you've had to explain it a few times to us in the crypto industry and the wider audience, how will the fungibility be indicated with regards to NFTs? Because I think that for a lot of people, it's still quite unsure how MiCA deals with this.
Okay, this is a very good question. So let's see in the next time the results. The NFT question is very easy. If you have an NFT, It's not regulated now. And in 18 months, the Commission will make a new proposal, and then we will see. I think it's necessary to regulate NFTs in a way everybody can deal with, but it's in 18 months after the next European election. We will have a new proposal from the new Commission, I think, and this is what I can say now. The debate about the fungibility is very complex. I think what the rules we have in MiCA now are enough, and the Commission will, because the Commission is always controlling things. I think the Commission will make an intelligent way that everybody can deal with. But I'm not sure if we got problems or not. But for me, it's obvious. Or for me, this text will show no problems. Maybe you have, maybe now I hear some other ideas about it, but I did not hear about this topic in the last months. So I hope that everybody can live with this regulation, but let's see what will happen.
So we will wait and have to see, but maybe just giving you the chance, Carola and Patrick, do you agree there are no problems with this, or do you see some issues with regards to the fungibility issue?
Patrick, you want to kick off?
Yeah, happy to. So I think, yeah, unfortunately, NFTs are one of the areas where I think the goal of regulatory clarity has at least not 100% could be achieved, because obviously, as we all know, there's one recital, one provision in MiCA that says that if NFTs are issued as part of a larger collection or series, then there's a degree of fungibility. Or that indicates a degree of fungibility that then raises questions of, okay, then what exactly do NFT issuers have to comply with? And my fear is that at the end of the day, it will be the national supervisory authorities that will adjudicate on those questions. So essentially, yeah, that's one of the questions where we will end up, I think, with a case-by-case decision from national competent authorities. And that's not necessarily in the interest of MiCA, but hopefully as we approach then, as Stefan mentioned, the next NFT report or initiative or legislative package going forward in the EU Commission, yeah, that can be reworked or it can be dealt in a way that is clearer to market participants out there.
Carola,
yeah.
Anything you add?
Couldn't agree more. I think from a lawyer's perspective, it's also good to know when are you within or without the scope of regulation. And I think NFTs, what is an NFT? Nobody has 100% clarity. Exactly as Patrick already phrased, there are these two stipulations, 1-to-1. So one token for one piece of art, it's outside the scope, this is clear. Then it starts with what does it mean to be fractionalized? If you have an NFT, but you have 25 to 50 identical NFTs, you tend to be regarded as a crypto asset again, which would be regulated then. So I think there is a lot of uncertainty in that sector yet. And I think there is, and exactly what was mentioned before, it will be subject to the national regulators to decide how it will be interpreted. And then it's again regulatory arbitrage. We mentioned that already a couple of times before. And then depending on the jurisdiction where you are in, whether or not you will fall within or without the scope of regulation actually. And then one point I think where we need clarity, but this is totally independent of that point, what do we think needs to be regulated as a financial service like of regulation? So if I tokenize a sneaker or trainer, as you may call it, does it make sense to really say if I fractionalize it, does it need to be within the scope of financial services regulation? Or where do we kind of see the border where we say, well, it doesn't make sense because not everything that can be tokenized or is fungible to a certain extent needs to be within the financial services regulation. So I don't talk about regulation, but financial services regulation, because there is always a top up, because the company is not the product, but the company is regulated. And I think sometimes it tends to be too much within the regulation, or where people have the fear it will be regulated in future. And if I take like my stamp collection, my sneaker collection and other things, I don't know if the financial services regulation is the right starting point. So I think we need an open discussion on that as well.
Thank you very much. So I think not so much as big problems that we need to address, but at least there are some issues which we will be talking about. And with that, we are sadly, really sadly, already coming to the end of what I think has been a really interesting and also insightful discussion. So a very big thank you to your expertise and insights, to our panelists, Stefan Berger, Carola Radke, and Patrick Hansen. Thank you.
Thank you, it was a pleasure.
Thanks.
Thanks. Bye.
Bye-bye.
Bye.
Bye-bye. Now, let's turn to one sector which has been partly left out by the MiCA regulation, but which promises a lot of potential for financial services. Some even say that decentralized finance, or DeFi, is here to revolutionize the entire financial system. To discuss this concept and its implications, as well as answer the question, where are we headed, I'm delighted to welcome two extraordinary experts to our cozy fireside chat today. First, I would like to introduce Brett Quick, who is Head of Government Affairs North America at the Crypto Council for Innovation, where she brings a considerable public sector experience, having worked in the US House of Representatives and US Senate in key financial services role. And Brett has also worked across the financial services ecosystem on Capitol Hill, with the administration and across party lines. Welcome, Brett. Also, I would like to welcome Peter Großkopf, who is the CTO and co-founder from Unstoppable Finance. And as former CTO and managing director at Börse Stuttgart Digital Exchange and CTO and co-founder of Solaris Bank, Peter has loads of experience in the technology sector. He's also a member of the Federal Ministry of Finance's Digital Finance Forum and is vocal about making decentralized finance a reality. Welcome, Peter.
Thanks for inviting.
So first, because I know that a lot of people are very familiar with DeFi, but some people in front of the screens might not have heard a lot of that concept at least. So Peter, in a few words or sentences, what is DeFi and what are the benefits?
Yeah, so I think there is no official definition for DeFi, but I always describe it as financial services that are delivered by blockchain infrastructure. And what does it mean? Well, I think for many people, potentially also in the audience, blockchain is most known by kind of like invention of Bitcoin and cryptocurrencies and like people trading cryptocurrencies. But its original intention is to have a decentralized database that can store transactions. So kind of like transactions, for example, as we do in financial services when we wire money from A to B, but also to move assets, so kind of like ownership of something from A to B. And further than that, there's blockchains that offer so-called smart contracts, which are tiny programs that are installed on the blockchain and then in the end run on the global network. And with these tiny programs, it's possible to implement financial services as we know them from banks. So for example, getting a loan, earning an interest rate, building an asset manager, up to running full marketplaces, like for exchanging assets, so like stock exchanges, potentially been built on this infrastructure. And so far, DeFi is in a very let's say early stage still, with a couple of million users worldwide. But over the past years, we've seen that it reaches almost like year by year more scalability and reach. And yeah, so for me, so what's the benefit? Well, so the benefit, first of all, is kind of to have a new infrastructure to build financial services. And to me, it's even the potential that if we bring, let's say, traditional assets, so also kind of whatever stock ownership or equity ownership and other classical financial instruments in a tokenized form, and then use these service layers of DeFi, so we can really create a completely new worldwide, global, unified financial service infrastructure.
Thank you for this introductory statement, Peter. And my question to you, Brett, you've worked quite extensively in the financial services industry, and you've also been in contact with lawmakers and regulators, especially in the US, regarding DeFi. So I've mentioned before that DeFi is said by some to revolutionize the whole financial services industry. But in your opinion, does DeFi have the power to at least disrupt the financial system?
Yes, thanks for having me. Absolutely. You know, when we think about crypto sort of broadly, decentralization and DeFi as a part of that, that's really sort of the revolutionary innovation, right? That's really where the opportunity is to disrupt the system that we've been accustomed to for so long, to really disintermediate some of the legacy traditional financial institutions, which would have been sort of at the center of all of our business and transactions that we conduct from a financial perspective. So DeFi and decentralization really have the potential to kind of disrupt the way that we conduct all business and all financial services. I think that's absolutely a reality. As Peter said, you know, DeFi is sort of still in nascent stages. It's still being developed. But the potential is incredible and undeniable, the potential for financial inclusion. You know, in the United States, there's roughly 20% of households that lack sufficient access to banking and financial services. And we believe that a lot of the potential associated with crypto and with decentralization and DeFi create a lot of opportunities to bring some of those people really into the financial system who have traditionally not wanted to be part of, you know, the legacy financial system that we have and interact with those financial institutions. And this is, you know, that data is according to a recent FDIC survey. And one, you know, important point from that figure is that it's much higher in historically underserved communities in the US, sometimes as much as 5 times higher. So absolutely, answer to your question, I think there's huge potential to disrupt the traditional financial system. But it is a sort of new technology that's developing, and we want to make sure that we get the regulation of the technology done correctly so that it doesn't sort of stifle innovation, you know, here in the United States or really in any jurisdiction. And I know that many regulatory bodies are thinking about how to get that right.
Thank you, Brett. Peter, I know you've been to the US very recently. So in your opinion, maybe you've also had contact with some of the DeFi players there, but which financial services system is more in need of disruption? Is it the European one or the US one?
That's a very good question, but I would say like the global one, because so far we've of course there's like different, let's call it island solutions. So there's like the SEPA space, there's whatever the Nordics, there's the US, there's the Asian countries, and each of them are like an island and connected, like of course like with the SWIFT protocol and correspondence banks and so on, but still kind of so this user experience that people are expecting from like money traveling around the globe is still not there where it could be, right? And therefore, so I would say there's really a need for a global financial service infrastructure which shares the same standards, and kind of like the more countries share these standards. So let's say like US, Canada, and then all the European states and so on, and then also can align on like whatever rules and rule sets around it. I think this could be a really powerful way to just like get one that works for everyone, and that's more the higher level goal that I have.
So what I've taken from both of you is also that DeFi is still in pretty early stages. So the whole blockchain technology is still pretty young. DeFi is even younger as an ecosystem. But I understand that there's also a need for standards, and standards also in the sense of regulation. So what kind of regulation is needed for the DeFi market to mature for one, but also to prosper. So do you think, there's a balance to be struck? Brett, maybe you want to start?
Sure, I'll start on that one. Absolutely, there's a balance to be struck. In the United States, we are sort of contemplating broad crypto regulation and what that means for centralized entities and what that means for decentralized entities. And there's a lot of really important questions that are being asked right now that really are going to take some time to fully answer and understand how some of these things interact. We want to make sure that we don't find ourselves in a situation of sort of a square peg in a round hole where we're trying to kind of force a new technology into an existing regulatory framework where it really doesn't make a lot of sense. There's a lot of discussion about taking time to study DeFi and how it can comply with some of the regulatory contours that are being contemplated for a more centralized entity. But we want to make sure that, again, the innovation isn't sort of stifled from a regulatory perspective due to an inability to comply with things that something that's run by a person or a group of people, which of course is not pure DeFi, where they simply can't meet the same regulatory requirements. They simply can't comply in the same way. So Mika obviously takes an approach of studying DeFi and how we can apply regulations. And that's something that we support in the US, but everything is there's a lot of negotiations going on currently about how to move forward with regulation here. But we want to make sure that we get it right. It's really important. This is really, as you said, the technological revolution, and we don't want to sort of miss that opportunity.
Yeah, exactly. And I can also add to this, and I would also stress your first point. That would have been my first point as well, because like in history, regulation has always been something reactive. Yeah, so kind of there like something in the markets or kind of like whatever banks in the past played with customers' money, and then rules were introduced also kind of like for how to manage risks and how to manage credit risks and how much kind of like reserves banks need to provide and so on and so forth. And also kind of like insider trading, somebody like a journalist of a German mainstream newspaper explained me that like until insider trading has been or has become like a regulation in Germany, it took like almost 8 years or something. So I didn't research on that, I must admit, but I will do, I promise. So, but in the end, this really shows me that so first there need to be a defect in the market or by a player in the market, and then we can react and introduce the rules. And I think I see it exactly the same way as Brett. So we need to observe what's going on, and I think also that we need to be very careful when introducing the rules, because the DeFi system and like DeFi financial service infrastructure works in a different way than the traditional one, because especially the roles who take a role in providing service really change. So because there's the user taking a much more prominent role, kind of holding a non-custodial wallet and being his or her own bank. But then also kind of like there's the different protocols that are delivered by like a group of developers distributed around the globe. I think there's like a few challenges, and also kind of the risk model of DeFi is completely different, because it's less kind of the reserves that need to be in place, because kind of risk management can be coded automatically in a smart contract. It's really about like hacking risk and really correctness of the applications, because that's potentially one of the biggest risks. But kind of so kind of when we talk about the regulation and introduction of rules, I think first it's to talk about the risks that are there, and then it's a question how can we tackle them. And when it comes to DeFi, I think it's also really important to name also the benefits of DeFi, because so like I always describe it, so I'm a techie, so I'm a coder by my origin, and what I like about DeFi is that I can now automate financial services to nearly 100%. So kind of when I give a loan, like a secured loan, almost all the implementation logic, also for the risk management and when the collateral is liquidated and so on, all the rules are coded in source code, which gives auditors also the ability to inspect that code and really verify before such a financial service can go live, which is, from my point of view, is a super powerful instrument. It's like like most banks don't have digital processes like to that extent that everything really runs digital. We can have that with DeFi, and we can then even verify those processes. I think that's something very, very powerful that we need to keep in mind, that we can really reach a different level of security for customers when applying regulation the right way to DeFi. Yes, but we still need to keep in mind. Brett was also talking about on naming MiCA, and there has been like an extensive discussion about how much should MiCA also be applied to DeFi, and luckily it's kind of like this will be like a different story like for the future, because I also believe that due to this kind of fact that DeFi works differently and has different roles. Also, some of the old rules are not one by one applicable to it. So to give one example from the German regulations, kind of the minimum requirement for IT system, BAIT, it's called in German. So the bank or the financial service provider needs to give access to the data center of the financial service provider, and like physical access to control whatever the firing systems and so on. Well, so the blockchain infrastructure is distributed around the globe, and potentially people are running nodes in their kitchen. But kind of like the reason for that rule, kind of to make sure that this data center runs forever, this is achieved in a different way. And therefore, and that's my last word, sorry for the long monologue. I could talk even longer about this topic. So I really believe that we need to end up with a principle-based regulation here, because kind of like the principle, stable markets, protection, supervision of the markets, customer protection, and so on. I think everyone who is a serious player in the market would buy into this, but we really need to make sure that we can implement it in the DeFi world the way we do it, because so this will be more automized, more scalable, and I think so that's where we need to end up.
Yeah, thank you for those insights. What you have both stressed right now was that there's always a reason for regulation. So a player acting in bad faith or something similar. And I know, and we've talked about this earlier during the Digital Euro Summit, a lot of people confuse DeFi with crypto and blockchain, and everything is put together. So now with FTX, we have our Mr. Stefan Berger called it the Lehman Brothers moment of crypto. So, Brett, how much do you think the FTX collapse will affect the DeFi regulation in the US in the coming years?
Well, look, I mean, what happened with FTX was shocking to everyone in the crypto community, right? But to your point, there is a distinction between CeFi and DeFi. And in the case of FTX, you have an individual bad actor who, by all accounts, it seems to have defrauded customers out of their funds, which really doesn't have a lot to do with the technology of crypto or decentralization exactly. And I mean, you can argue that the benefit of decentralization is that you don't have one person controlling things and making these decisions, or a group of people. It's truly, a decentralized governance, and that's a huge benefit. So, I mean, it's no question that seeing what happened with FTX has made everyone that's thinking about a regulatory framework and thinking about the community sort of pause to think about how we move forward and make sure that we have adequate consumer protections and investor protections, which the Crypto Council was really sort of set up to advocate for. And that's our, sort of our global mission, to advocate for a reasonable regulatory framework that gives, and this kind of goes back to what Peter was saying about DeFi as well. There's a lot of benefit to customers and investors realizing that there is some sort of regulatory oversight of whatever sort of, financial tool they're trying to utilize, including DeFi. So, I think it's prudent for lawmakers in the US and other jurisdictions to pause and kind of think about what sort of regulatory framework we're pursuing. But I think it's a really important distinction to make that, what happened with FTX really wasn't associated with DeFi at all. And you can make the argument that it really wasn't even a crypto issue. It was one bad actor, which you could have, you know, in any financial institution, in any form of finance.
Yeah, and I would also add to this, because I think, like, especially when we look at centralized services, and for example, FTX has been one of those, like a centralized exchange, but also look back in the history of financial services, like banks and other traditional finance players are also centralized companies. So there's like one company that's formed. There's humans working in there. They have instructions for processes, how they should do things, but still sometimes these rules get violated, whatever, because of whatever with other intentions. I don't know. They have problems with drugs or playing, or they're simply criminals. So like we've seen with Wirecard, and in the end, so I think as long as humans really own the process, we need to really take care and also somehow expect that it's potentially not trustworthy. Let's put it rather extreme here, and therefore we have like regulation in the traditional sense, really to supervise the processes and have controls on the controls and all these measures to really make sure that we can trust this group of people delivering a financial service. And the beauty of DeFi, so also like I was talking about the solutions earlier, is that we now can really like the process can be 100% source code, which of course implies the source code needs to be right. This needs to be controlled and kind of like tested by humans. That's for sure. But if somebody comes to the conclusion that's working correctly, and once it's on the blockchain, it's very difficult to change or even impossible to change, and is running there forever the same way, and the machine will always execute it the same way. And I think that's a really big opportunity for moving forward, and therefore. And also another statement to the FTX case. So from my point of view, as this is a centralized exchange and a centralized company, us in Germany with Kreditwesensgesetz and also kind of applying virtual currencies to Kreditwesensgesetz for almost like, yeah, I don't know, 6-7 years now. And with MiCA being introduced in Europe, I think the homework for like trying to prevent such things to happen is already done for these jurisdictions. But as long as people are going overseas to trade whatever shitcoin, let's call it shitcoin, and try to gamble and make a lot of money. So as long as they are doing that and not kind of really taking regulation and stability and quality as a feature, I think we will see these cases again and again, because it's a global world, and people are free to choose where they win and lose their money.
So I think now we've talked about the definition of DeFi, even though there is none at the moment, like really. We have talked about the potential, we have talked about the regulation, and now I want to come back a little bit to the point of the topic of our panel or fireside chat today. So what does it take for DeFi to become a mass market product eventually? Or do you even think that MiCA will become a mass market product at some point?
Well, look, I mean, as we've sort of covered throughout this discussion, DeFi and this idea of decentralization is in nascent stages, right? It's not ubiquitous amongst communities and individuals yet. We need to figure out the proper regulatory oversight. You know, the Crypto Council, our belief is that establishing a reasonable, thoughtful framework that really promotes innovation will take the industry, you know, sort of to the next level in terms of consumer confidence and investor confidence. But a lot of these innovations are just being developed, you know? So I think it's going to take time to consider how they sort of find their way into, you know, everyday households. But there's an opportunity for that to happen. And I think, you know, we've already covered sort of the vast opportunities with widespread adoption, but we're just not there yet. I mean, it's a relatively new innovation that, you know, developers are going to continue to work on, and regulators are going to continue to figure out how to address some of these instances that, of bad actors and things going wrong, to give people confidence to want to be, involved in this sort of technology. But I think that's where we're headed. We just have to make sure that we get it right along the process.
Yeah, so from my point of view, there's different things that will accelerate this. So first of all, DeFi has a horrible user experience for first-time users, and especially people who are not deep in crypto, or who are not like crypto people themselves. So first we need to solve this UX problem. So that's what we do with Ultimate Money, with our wallet as well, kind of really trying to get the next generation of users into the space. But at the same time, also kind of the services that the people are using needs to kind of get like a new level of quality in the future, because so while we so far talked a lot about the FTX scandal, so let's be honest. So there has been in the beginning of the year also like a big, let's say, scandal in the DeFi world, like with the Terra Luna stablecoin, algorithmic stablecoin crashing, and there have been a few hacks also all across the year. And so some of them also like poor quality of the protocols, or the developers taking things a little bit too lightweight, like on their shoulders, like when people invest like millions of money in their services. And from my point of view, like the next step for the whole industry would also be formed on really solving the liability question, because I think when and I know this is like a bit controversial also in the industry, but so from my perspective, people will always be willing to invest into something if they know, like, okay, so this is halfway safe, secure, whatever, battle tested, but also when they know, like, okay, so if shit hits the fan, so what are my rights and what can I do? And so from my perspective, liability can be created in two different ways. So the first one could be to have a liability umbrella, so which could be like protocol to protocol base, so where kind of the protocols in the DeFi space negotiate on a certain standard, also like for doing security audits and so on and so forth, and try to give some guarantees as much as they can on the technical level, and then guarantee for each other. So if there's a break somewhere, so this could be at least if people or users could be compensated. So if there's a loss, that would be a super strong signal. And the other way would be like liability in terms of civil law, so that so I know that that's happening in the US. The protocols don't like it, kind of like to force protocols into a legal entity. But maybe us here, like in the US, but also in Europe, have to rethink kind of what is a legal entity, and maybe we need to have a new form of legal entity, so that comes closer to like a, let's say, global ad hoc company that could also be a limited, and maybe we need to think more in this direction to make kind of like the way how DeFi projects organize a really more official way, and then also being able to give liabilities to its users. And yeah, so that's my 2 cents.
Yeah, regarding liability, so you've mentioned one of the problems with DeFi being the user experience problem, and then also you talked about the whole Terra Luna disaster, so to say. And my question is, how centralized is decentralized finance today, and what needs to be done to maybe have it more decentralized? Is that a problem in your opinion?
Listen, in my view, I think there's a spectrum of decentralization, right? And we saw this question specifically in the US a couple of months ago. The CFTC brought an enforcement action against UkiDAO, which I'm sure you all are familiar with. And that was really the question. And to Peter's point about liability, they ultimately held token holders of the DAO that had voted their tokens liable for these violations of the CEA here in the US. And there was a lot of concern about that. There continues to be in the crypto community, because it doesn't make a ton of sense from a liability perspective or from a regulatory perspective. But in the case of UkiDAO, the question really came down to how decentralized was it, because it had 2 creators that had seemingly rapidly tried to decentralize the DAO, but they were still sort of pushing marketing and pushing folks toward it. So I think there are a lot of people that believe that really those individuals should have just been the ones held accountable. But this is a question of how you measure decentralization. And because it is a spectrum and there is some sort of progressive element to decentralization, not everything is instantly decentralized. It goes through a process of becoming decentralized. So, there's no definition of that, to Peter's point. But we sort of have like a test way of thinking about it. Is the code open source? What's the governance? Is there a person or people controlling it? And then what's sort of the ecosystem? Are there, as in the UkiDAO example, are there people that are still marketing the DAO and pushing folks toward it? So, important questions that need to be, I think, further considered of how you measure true decentralization. But there's no question that that it's not always black and white, one or the other.
Yeah, so to me, like the decentralization question, I have also a quite special view on that, because so to me, kind of, so when I was at the university, what I learned about company organizations, like that form follows function. So therefore, like in DeFi, many people refer to like it's a decentralized team, and they're distributed globally, and some kind of like some things like result out of that. So to me, this is, of course, this is like true how DeFi is right now, but I think where DeFi would be tomorrow, I think it's not as important, because to me, it's really more about how is the value chain being created. And to me, like the decentralized and decentralized finances, that there's like different teams, and like these teams could be DAOs, so like decentralized autonomous organizations, so these like decentralized groups of developers globally working together, but potentially could also a DeFi service being developed by whatever, a big bank, or by like a simple corporate like from Germany. So I think that doesn't matter that much, because it's about like the service provided. I don't know, the lending protocol is provided by one entity, the decentralized exchange that's taking care for liquidating the secured or the collateral of the secured loans once they hit a certain price point, can be operated by the next one. And that's kind of, well, in the industry it's called the money Legos, kind of that there's different services provided by different teams, and you can combine them and create new measure up financial services out of that. And I think that's really, to me personally, the core of the decentralization, and also how it would look like in the future, and what organization is behind the delivery. I can also only add to what Brett said, and that's also the reason why I came to the conclusion that there's either the liability umbrella or the legal entity, because so when legal entities have been introduced in civil law, it also had the purpose to protect the entrepreneur and to protect the people who are running a business, and protect the liability, and I think so when people are at the moment, so they're not acting in a legal free zone, right? So kind of like the US has like common law, and Germany has common law, and France has common law, and in the end they all act in common law. And at the moment they would, at least I can speak for Germany, they would be liable with their personal belongings and ownerships. And I think also to really let the industry strive, we have to protect these entrepreneurs, and therefore we need to introduce levels of protection for them.
Yes, we are already coming to a quick end of our nice fireside chat, but I don't want to leave you with this point of DeFi. So my last question would be to you two: what is your idea or outlook on DeFi? Where do you see DeFi in 5 years, let's say? Just in maybe 3-4 sentences, what is your outlook in the next years? Brett, do you want to start?
Sure, happy to. I mean, I think there's a lot of questions that are being contemplated right now, certainly from a regulatory perspective, which are probably going to largely inform, the future of DeFi. As I've kind of reiterated a couple of times in this discussion, it's really important that we get it right and that the innovation isn't stifled. And in the US, that's, what we're seeking to do. I think if we can get that piece right, and we can, really increase consumer confidence in the technology, then it does have the potential to truly be ubiquitous in the coming years. But it's a new technology, it's developing, but there's a lot of potential that we're really excited about.
Thank you.
Yeah, so to me, it would also be that like in the next 5 years, let's say the traditional finance world and the DeFi finance world is going to converge. In terms of there's the projects also in for example in the German-speaking European countries to have digital securities and also being able to hold them on a blockchain for managing cap tables and all this kind of stuff. And to me, it will be I'm very curious and very keen to see how, let's say, the world of like traditional financial instruments in a digital form, like and also like as a like a real legal form, and then using the new infrastructure that we've seen developing over the past years, kind of with future adjustments and enhancements also to like add more security to it. And I think if these two worlds really meet and so like global unified infrastructure also for organizing markets and exchanges and for custody meets different assets around the globe that would be tradable for everyone, I think that could really bring finance to the next level.
Thank you both for your insights. Thank you both for joining us today. And I'm sure that we will have plenty to discuss on how to best regulate DeFi and how the benefits of a decentralized financial system can shine while the associated risks are mitigated. Thank you for being here, Brett Quick and Peter Großkopf.
Thank you, Benedikt. Great discussion. Thanks, Peter.
Thank you.
Now, we are nearing the end of our second Digital Euro Summit in 2022, but before we end, we are going to talk to a man whose company is looking at the data in crypto and uses this data to provide anti-money laundering and investigative services for government agencies, cryptocurrency businesses, and financial institutions. Of course, I'm talking about Michael Groninger, the co-founder and CEO of Chainalysis. Prior to founding Chainalysis, Michael was the co-founder and COO of Kraken, one of the world's largest cryptocurrency exchanges. Hello, Michael, and welcome to the Digital Euro Summit 2022.
Thank you so much. Great to be here.
So let's dive right into it. Setting aside the recent developments with FTX and Binance, as well as the general downturn in the market, globally speaking, one can say that crypto adoption is still quite high. So in your opinion, what is the status of crypto adoption in Europe and how are different markets developing at the moment?
Yeah, so of course, like we see always in crypto that things can change overnight and there can be a lot of drama and volatility going on. But I think the interesting thing is to look at the longer term trends. And I would say if we had had the same conversation like today, if we had had that earlier this year where we saw 3 arrows and Celsius, we would also be like, oh, what's actually going on tomorrow? But then at the end of the day, we saw that like as things settle, then we look at the bigger trends, and that's actually the one that's most relevant. So if you look at crypto adoption, it's still quite high, as you say. So if you go back to early last year, that's where we saw like the peak of crypto adoption, where basically everyone wanted to be part of the crypto space, and it fell a little bit, and it started to grow again. But if you look at like in Western Europe and in Europe, we clearly see that some of the main players in the crypto economy and the main growth have happened out of Europe. So we can see that like, for example, Western Europe alone is more than 20% of the average total crypto activity around the world. And even in the recent quarter, we saw that that's still maintained. So still see that like Western Europe is a big part of the crypto adoption. And one of the interesting takeaways from when I look at crypto globally is that it's not just one use case driving it. It's not like only speculation or only gaming. It's like basically from every single jurisdiction, there's different use cases driving it. It could be anything from crypto gaming to remittances to a lot of other use cases that are driving the adoption in crypto. So it's clearly an industry that has grown in resilience and importance over the years.
Very interesting. So you mentioned some of the numbers. So looking at the numbers in the recent Chainalysis report, what is Europe doing right in terms of crypto adoption, in your opinion?
So I think that one of the things that always plays a role is regulation. And if we look towards Germany, we see that German activity in the crypto space actually has been growing 47%. That's a lot, especially in the current markets, and you have to ask what changed there. What actually did change in Germany were that there's been enforcement of a 0% long-term capital gain tax, and also allowing a lot of different asset managers and manager types to invest in cryptocurrencies. So that's clearly different regulatory tailwinds that helps the crypto industry, and clearly means that people becomes more prone to enter the crypto space. So we see that as a good example. There's been other movements around Europe, but clearly, if you look at it as a whole, we've seen that the growth in the space over the last year has been up to 30%, and for Germany, the outlier is 50% growth, which is big.
So you already touched upon the topic of regulatory developments, and we are going to talk about this a little bit later. But first, let's have a look at one of the elephants in the room when we talk about crypto. Of course, I'm talking about crypto crime. For example, last week, the Fed seized $3.3 billion worth of Bitcoin from a decade ago, basically. So although illicit crypto crime volume is down overall, 2022 is said to be the biggest year on record for hacks at the moment. So what do you say to people who argue that crypto is a safe haven for fraudsters and criminals?
So I think crypto is many things. And one of the things that's really unique about crypto is that it's extremely transparent. So with any new technology, you can, of course, hack it. You can do a lot of other things because it hasn't been hardened over time. And what we have seen, especially in terms of hack, has been infrastructure hacked in bridges. And bridges is a technology that bridges two different blockchains with each other. And to get that right and to build that technology and build it and harden it to the level where it can hold billions of dollars is very hard. And we have seen that has been exploited by various hacking groups. Still, at the same time, when these things happen, there is a growing tendency to the ability to freeze the funds that gets hacked and actually claw them back. And as you said, yes, this year is in hacks. Last year ended up just a little bit above $3 billion. Now we are closing in on $3 billion and will definitely cross that line. So this will be the biggest years of hacks in history. And I think the main driver there is, as I mentioned, infrastructure hacks. One of the interesting things that is to be mentioned there is that one of the main hacking groups are state-sponsored. It's run out of North Korea, known as the Lazarus Group. And it also means that the adversaries that we see in hacking crypto infrastructure are very strong and very well resourced. So that's, of course, a deep concern there. At the same time, one of the examples of a hack were on the Ronin Bridge, and in that specific situation, we managed to freeze and claw back 10% of the funds, which is amazing in itself. And more of the funds are still sitting out there with difficulties to be moved, simply because we are watching.
Great, that's good news to hear. And so I think the bottom line is that crypto is not per se a safe haven for criminals of all sorts. But let's turn back now to the more legitimate purpose of crypto and blockchain. If we look at the regulatory landscape again, crypto regulation is advancing very quickly across the globe. So what is your view on the regulatory developments in the recent years, and where are we headed?
So I think an interesting thing when you look at crypto regulation is that we have laws of finance that applies to a lot of different assets. The challenge often is to figure out what are the new assets actually, what kind are they? So for example, if you launch an ICO and did that back in 2017, the argument were, is it a security or isn't it? We knew what the security laws were and the implication if it was deemed a security, but we didn't really know whether that was being recognized today. We look at the same for a lot of different new technology pieces and new part of the crypto economy, tokens, DeFi's and other things. And there is a need to figure out what is it going to be, how is it going to be looked at? What kind of regulation should apply and what can be expected here? And I think for many pieces, it's also about humanity figuring out what do we think it is and how should these laws apply. At the same time, we have seen a lot of interesting movement on the regulatory front. We've seen MiCA in Europe that has created like more regulatory clarity in terms of like how to treat certain assets and what rules applies. I think the big takeaway for me on regulatory clarity is that almost no matter how bad the industry might perceive a regulation, it's still positive because it creates a level playing field for participants. And it means that people can enter the space with more conviction. And we will see a lot of business thrive from the fact that there's regulatory clarity. Without regulatory clarity, you don't really know what tomorrow is going to look like. And that will have an impact in your ability to act.
So you mentioned it, and during an earlier panel, we have already talked about MiCA and its implementation in the EU. So from your perspective, do you think that MiCA is able to set a standard, and do you think that regulators all over the world are able to keep up with the pace of innovation in the crypto sector?
So I actually think that it's okay that regulators are not completely able to keep up with this, because we are changing how finance will work in the future. And we saw that with the internet. We were changing how information were flowing in the world and how social media didn't exist before the internet, for example. So there are many things that are changing. And I think that when things are changing, we need as a society and as like a civilization to understand how do we want to treat them. And if we came out early on in the process, we would most likely get it wrong. So we need to have this period of time where stuff is a little bit unclear, where we live in a sandbox and we are playing with the technology to figure out what do we want it to be, how do we want to treat it, and we will learn from some of the mistakes that are being played out. We'll see mistakes being played out in real time all the time, where we were doing one thing for a certain asset class and that caused certain problems, and we are doing another thing for another asset class and that caused other problems. And at the end of the day, we will learn from that and create a better regulation. So I think it's okay that there is a window of time where regulators plays catch up with technology and with the industry. And at the end of the day, that will create a better regulation in the end.
So yeah, let's see where the regulation and the regulators will take us. But now let's maybe circle back to where we started off, namely the global adoption of crypto and blockchain. And there's a saying that people say that bear markets are for building. And what developments in the last few months maybe have caught your eye personally? And also, same to that question, which areas is Chainalysis keeping a close eye on during this bear market?
So I think that if we look at the crypto trends in general, I like to make an analogy with the internet in the 90s and early 2000s. In the 90s, a book came out around content is king for the internet. What was actually missing in the internet was you had an amazing technology, but it was not really being used for anything. So you saw like there was no videos on the internet. There was no audio on the internet. You couldn't listen to music. You couldn't do anything like that. There was a lot of unclarity around like how should we enforce licensing of the music? How should we enforce like that people didn't download it? And on top of that, we had like other pieces of media that couldn't figure out what their business model should be on the internet. Content were missing, and that was basically only once we spent the decades in digitalizing and creating clarity from a legal point of view in how we could treat content on the internet. That was when we really saw the big growth. We're going through exactly the same on the blockchain today. So in the crypto space, content for crypto and content for the blockchain is tokenization of assets. I would say tokenization of real world assets is probably like the grand goal, long-term goal. what we are looking at today is, for example, tokenization of digital art. So when you look at like digital art, it's still not established that if I take the same piece of digital art and I set it on one blockchain in one platform compared to another blockchain, another platform, who now owns it and who did I defraud and what actually happened. We want these cases to be played out in a court of law, and we want like some history around that before we put a car on or a house or anything else on a blockchain and try to transfer ownership. But when the ownership of asset moves on the blockchain, it will become liquid, and adding liquidity to an asset class actually increases value. So we will see a lot of growth in value, but it will take time to get there, both from like a just like distribution point of view, but the other point of view is just from a legal clarity point of view of what it means. So that's like clearly one of my big focus points there. Another one is DeFi, and DeFi is again a technology side, where you suddenly out of technology can build something that could only be built in an institution before. You can move from one asset to another simply by code without any real third party involved. And that's never happened in the history of finance before. That's huge, and it's going to change how we look at finance going forward. For Chainalysis, we try to make all of this a seamless experience for our users. So we talk about the blockchain, and at the same time, there are tens, if not hundreds of different blockchains out there. And we want all our users to experience this as if it was one blockchain. Make it very simple, a very simple approach to our UI, a very simple approach to how you conduct an investigation, how you do compliance, and also how you do business intelligence to understand your customers. So constantly making everything simpler for our users and move into new verticals. For example, business intelligence is one of them.
Well, time is sadly running out, but I think there is so much more to talk about, and we will definitely come back with a third Digital Euro Summit maybe next year. Thank you for your time and expertise, Michael. It was a pleasure to have you, and goodbye.
Goodbye, thanks for now.
Thank you, bye-bye. Due to time constraints, we have recorded this Q&A before today's Digital Euro Summit. Now, I'm joined again on stage by Lucas and Kevin. What a day it has been, guys. I personally like to think that we learned a lot today, and that we, and hopefully also you in front of the screens, leave today a little wiser than before. Not everything is working out, and as people have hoped, and there is plenty to improve. Nonetheless, I think that there are huge benefits, and all of today's topics are worth of further exploration. So as I've mentioned, I'm pretty sure that we will be welcoming you back at the Digital Euro Summit 2023 here at Bitkom. Until then, farewell and enjoy your evening.
Thank you very much. Goodbye.
Bye.